Good morning, everybody. How you guys doing? Still here? Well, that's a plus. What's up, Peter? Big Bear, welcome to Dillionaire, man. Hit me up on the Discord. I'll get you added after the stream, dude. Thank you so much. Theta won on Friday. Yeah, a little bit. Well, I think more than anything, Bulls failed on Friday. Well, they sort of failed. They were successful in keeping us from falling below 44.50, but unable to push the price above 44.75. My body is ready. Good morning, Middle Western consumer sentiment rep. Thank you, Girk. You helped me recover my port from a beaten down 1500 to over 18K in 2 months. Thank you so much. You're welcome. That's awesome, dude. Also, well done. It's a very fast rate of growth. Careful. Hey, Jen. So, I guess we'll start with SPX. We got a bit more of a breakdown on longer dated call positioning into the end of last week, but we saw some of it come back on Friday. Some of the out of the money call interest into the early part of this week built up a lot, partially in an effort to push us above the 44.65 strike. They were buying the 813 strike or the 814 strike at like 44.60, 65, 70, 75, and 80. And so tomorrow, after those in the money puts took profit, those calls are still there. And so we have a bit of a situation where, at least right now, it looks like we're kind of opening with options positioning about even to the put and the call side. And then the calls are a little more leveraged, moving up above like 44.70. So I think we're going to be in a very similar situation where, we need to break 44.80 to the upside, or like 44.60 to the downside to get any really big moves. So we'll still have those really tight confirmation levels, but there's definitely gonna be some carryover, and we're also going into the first 2 days, like the 2 days prior to SLD, which tend to have a lot of upside pressure anyway. So I would suspect if there was an attempt to pump for in an effort to reduce Vega exposure to the upside, it would be over the next couple of days, maybe the next 3. Mike, welcome to Zillionaire, man. Hit me up on the Discord. I'll get you added after the stream, dude. Appreciate it. Reading Best Loser Wins. So many good lessons in there. Thanks to the rec. No problem. From the Midwest, I know more than you think. So basically up here we still have 4450 sold puts. Um we have them at 4500. They're at 4475. And then the majority of them now are now at like 4450. You know, we saw some de-risking of this and the smaller 4525 positioning in the early part of last week, the last time we were anywhere near those levels, in the last week and the week prior. So these are effectively abandoned. Like I don't think we're gonna see. I don't think we're gonna necessarily see those levels this week. That would require quite a big push. I mean, almost 300 basis points to get back up there, right? Well, 200. So I'm gonna be more focused on them trying to clear out the 4500 level around where our fast gamma is kind of sitting right now, and the 4475 level. And they may try to get this risk kind of off the table before OPEX, would be my expectation. Vol's been acting kind of weird. If you look at, if we go out here and take a look at VIX futures, you'll start to see that the curve's picking up a lot into January. And usually you generally see like an expectation for higher vol through August, October, like August, September, October, November, and then you get like a nice like seasonal dip into December. But this year, after the last like 3 years of January just having insane volatility events, this year they're really starting to price a lot more in. And so we get this big uptick in the forward curve there going into the January contract. And even right now, I mean the August contract I think is sitting at like 15, which is roughly in line with where VIX is, a little higher. But September jumps up, well, quite a bit, up to 1705. So we're definitely seeing more interest in September vol. Some other things to note about this week in regards to the SPX. I think the market makers are starting to segment zero DTEs, which they kind of do anyway. Generally market makers break up their Greeks exposure by time windows, and I think they're getting a lot better at breaking up the like zero DTE time window, and risking this off and pricing this more appropriately, and then that way all of their hedging requirements for that are kind of packaged together. And they're not hedging infinite gamma risk at spot for positions that have 30, 60 DTE. And I think that's why we're starting to see a bit of a fall off in the underpricing of zero DTE contracts. It's not gone, but it's starting to fall off. And things like 1 DTE straddles are starting to look a little better because they're up pricing the zero DTE vol. But the next day or 2-day contract is looking very, very attractive at like 12% volatility, right? So some of the things I noticed this week, we can discuss that. Burning a little old pickles lettuce before I have to clock in. I hope everyone's having a good weekend. Yeah, so far. Hope you are too, Spick. Are we still paying attention to the JPM collar? Yeah, but it's quite far out of the money on both sides. Don't forget that this Wednesday is the monthly expiration for the August contract as well. If you look at Microsoft, I saw 7.7 million and 327.50p come in end of day Friday. Well, first thing I'm going to tell you is that seeing options volume is not an effective means of predicting forward price action. Microsoft does not look particularly good, though, at least from a technical standpoint. Even if we go out a little wider. Yeah, this is broken down. It's not really at a significant support. Do you know if they were ask or bid side? Discord is linked to YouTube, and I don't see any groups. Sometimes it can take a minute to update. Like for YouTube and Discord to sync. I'm not sure how long that takes, but I know sometimes it can take like a couple hours. I can manually sync it after the stream, but not right now. Log out and log back in. Yeah, that might do it too. Yeah, so I would say your next target's gonna be probably around 312 to the downside. I don't think put interest is pertinent here. But I also don't think it was climbing significantly. Let me check. This was Friday. Give me 1 second. Oh, you piece of shit. God damn it. Yeah, I don't see a significant tick up in put interest at the end of the day OI. If anything, puts fell off a little bit on Friday. Call volume remained fairly stagnant. Microsoft closed just above gamma neutral on Friday. I'd actually be worried about a bounce here. Pretty big uptick in charm. Vex. Okay. Gamma slip negative? No. Gamma's still positive here. Yeah, I'd actually be more concerned that this would bounce. It could be that people are selling bullish puts, right? I think that should be a consideration there. They may be selling in the money puts as a bullish bet. Or if somebody wanted to sell higher, right? They could have, given that I don't see any significant change in OI, it's very possible that, you know, someone just bought the puts to exercise. Can we go back and review the one DTE SPX strangle? It's a straddle. That's not a play. That's just an indicator of pricing in the market. There's nothing to review. It's not a play. I'm just discussing the advantages of pricing in the options contracts. So there's a moderately high possibility of a push to 4,500 to get calls in the money over the next 2 trading days before SLD on Wednesday, right? Yeah, and then obviously intraday we're going to pay attention to out of the money positioning. And that's kind of something I want to talk about that happened last Friday. And maybe you guys want to weigh in on how you want this addressed in the future. But, in the morning DD, I outlined like 4,480 and 4,500 as resistances, right? These are the two bull bias signals. Um, so I can't not discuss this. This needs to be, even though the possibility of this is slim, right? Low confidence. The confidence increases the closer to 4,480 we get, right? So in the morning when we were testing 4,476, the confidence in a move to 4,500 becomes higher, right? Because we're very close to breaking through 4,480. But people also go and buy the 4,500 call, right? And this is stupid. You don't want this call. Even if the confidence in that call is high, you would want to get like a 4,490 or a 4,480, right? Because that's where your target is, right? That's where it flips and possibly tests 4,500. Now I have to discuss this because the options interest is really high, and there was a concerted push to try to get the price there. So while it's a target, it doesn't mean you buy an option at that strike. You still buy your options close to where we're trading, right? Because you want to reduce risk. And if you're buying 4,500s and we're trading at 4,470, you're just throwing money away. I mean, it would be no different from people, buying 4450s in the morning if I lacked confidence in the upside, right? This would have been an equally risky proposition trading at 4470 as the 4500 is, except maybe a little more expensive. But you don't want these are PTs. This doesn't mean this is where you buy a strike, right? This is like the outer ends of where price can move during the day. So when you're playing zero DTEs, you want to stay fairly close to the money so you can take advantage of those big moves in gamma as price moves up or down, right? You don't want to be super far out of the money, even if you think like a big move is possible. Um, unless there's some kind of news or catalyst to back that up, you don't want to be buying contracts that are 20, 30 strikes out of the money. The chances of them printing are infinitesimally small. And so for me, like knowing 4,480 and 4,500 were targets for the day, I went and bought 4455s and 4460s, right? Not 4470s and 4480s. You want to like out of the money's fine, but you want to stay kind of close to the money so you can get out of that position, especially if things don't go your way. Because if you're at like 4480 and the price slips 10 BPS, you're going to lose 50-60% of the value of your contract. Okay, I haven't seen something that big on Microsoft, so I thought I'd ask. Yeah, looking at options flow is moderately useless. There's so many different positions that it could be, and the fact that the OI didn't carry over into close, who the fuck knows, right? It could be arbitrage. I mean, it could be any number of strategies, right? And so someone may have just bought Microsoft and then bought that contract because it was underpriced and used it to exercise their shares, right, and capture the arbitrage. So is the moderately high possibility of a push to 4,500 to get calls in the money over the next 2 trading days before SLD on Wednesday, right? I mean, that would be the expectation based on historic data. Yeah. Um, Obviously, we'll see how options positioning looks going into Wednesday. Once you start getting above like fast gamma and approaching gamma neutral, they could start to get a lot more leverage and maybe push higher. Do you think we see any decent cat index arbitrage type action to the downside? I don't know what you mean by that. Are you asking if cat will go down because indexes are going down? I mean, yes, cat's pretty heavily weighted in S&P and Dow. So it's index exposed. Do you think we can see any? You made it perfectly clear that 4,500 was possible, but not definite. Bulls have you Bulls have been trying and failing all week to pump us. Don't listen to Watkins bullshit. You said 4,500. I don't listen to Watkins. He's a fucking idiot. You mentioned something that I'm paraphrasing here, but something along the lines of dealer gamma positioning being based on each strike. Can you review that one more time for a regard like me? Well, on a smaller scale, especially with zero DTEs, the effects we see of like gamma neutral and delta neutral and stuff like that can be realized in more minute quantities, right? Based on how much gamma exposure is at each strike. So, if there's a strike with a lot of negative gamma and we move to the upside of it, the market maker might start de-risking that strike because they've hedged so heavily for it. And that creates kind of a smaller instance of the effect we would see when crossing something like gamma neutral, right? Gamma neutral, we have all of the options interest on the chain finding a neutral point, but on zero DTs, given the enormity of the position, sometimes you still realize a lesser version of that same effect. I think that's what you're referencing, although because you paraphrase me, I'm not sure exactly. Say I knew what a company's accounts receivable come due in a specific quarter. Would this be a big factor in playing an earnings call, or is it more of a quarterly play in the cloud sector? Um, hmm. Probably earnings, but I would look into see if the company discloses any like financial data in the like middle of the quarter. Some of the cloud computing companies I know, well, a lot of tech companies, um, will sometimes put out financial data before their actual earnings. So I'd look into that, but I would say generally it would probably be in most cases it would probably be realized during earnings. I think you addressed it perfectly. If people are buying that far out of the money, that's on them. Well, I'm trying to make people understand why you don't want to buy that far out of the money and how it's disadvantageous. It sounds like a great deal, right? Like I'll spend, $50 and, make 500. But the chances of this happening are very, very small. It's much better to regularly spend like 5 to 600, right? And make, 8. What strategy should we be focusing on this week? A few weeks ago, spreads were working. Then last week, directional short term plays. Put spreads this week? maybe below 44.50, although I still think that we can see some movement in our current range um between like 44.80 and 44.50. So I would say that there's probably still a lot of risk on selling spreads, partially because of the way like the market makers pricing them in the early part of the day, and partially because both of the resistances to the up and downside are important ones. So I would probably avoid spread selling, unless you had, like a confirmed rejection or something at one of those resistances, and then maybe you'd want to trickle in some smaller spreads, and something you could still close out before the end of the day if necessary. Uh, I still think directional plays with limited risk are best right now until volatility falls back into a more manageable range like sub 14. Right now, I think we're probably going to see another spike in vol at least some point this week. 15, maybe 16. And that could be tomorrow morning. But, if that happens, you're at a lot of risk if you're selling short puts. I got laid off from said company and no NDA. Ooh. That, I would still check your HR paperwork, or check with HR. There may be clauses about trading their stock, due to knowledge that you have that isn't public. You don't want to get popped for insider trading. So something to consider. Do you think GME might see some more shorting this week? I mean, I think that's going to be largely based on index moves. We found a lot of stability here at like $20. This could start to reverse soon. And it's very blown out, but I think this is also the effect of people selling, because we're really not seeing like a ton more liquidity in XRT, right? But IJH has become, far tighter than we thought it could. It's significantly below historic levels, at least since it joined the index back in 2021, right? And then, GME itself still isn't seeing an increase in borrow rate, and yet there's continuous downside. So I would say that no small amount of this is people selling or a large holder selling off. Um, that's the only reason they would be able to find additional liquidity beyond the prior levels, right? Especially to this extent. So we may continue to see that happening. Uh, Obviously, we'd be looking for a reversal in this trend, right? We want to see those tips come back together and crisscross. So right now, yeah. I mean, it looks like we could see more shorting. Maybe a small bounce back up to like 21, and then another big short before OPEX. That would be ideal. Some change in the borrow rate this week would also be a decent sign, and we've yet to see anything even remotely like that. And the fact that we haven't seen any increase in the borrow rate at this point, I would say maybe nothing until September, but we'll watch it this week. We may have hit 4,500, but the Fed lady started spreading FUD on Friday. I mean, they tried, they failed. They tried very, very, very hard to get us above 44.80 on Friday. And if they had, it was clean sailing all the way up, but they did not. Um, they got VIX down, which isn't too unusual for a Friday, but yeah, they were ultimately unsuccessful, and even holding above 44.75. The biggest problem there, and I kind of highlighted this on Friday, is when you're selling long dated puts to go short vol, and you're buying short dated calls to push the index higher, but someone else is coming in and buying longer dated puts, and the delta on those longer dated positions is significantly higher than the delta on short dated calls, right? And so the market maker hedge isn't gonna move substantially with the zero DTE interest, especially when the amount of delta being purchased to the downside is equivalent or greater than the delta being bought in zero DTE calls. They just have way more leverage, like against the market maker's hedge. All I need is one good YOLO hit to get out of PDC, and then I can start being smart with slightly out of the money options. Yeah, hitting on YOLOs is generally not the ideal way of getting out from under PDT. You just need consistent gains to get you above $25,000. That mentality will blow up your account. Now, if something comes along and you hit it big, awesome, but don't chase the gains because you'll lose. Typical employee handbooks have a clause about how confidentiality extends beyond employment. Yeah, generally. Off topic from SCX, I noticed CCJ Uranium has the largest interest at the 32 put 818 strike. But do you think this is a hedge or an indicator of a small pullback? I think it means nothing. Open interest on the options chain doesn't necessarily mean anything. They could be sold, they could be bought. You have no idea. I definitely don't think it has any indication on spot price for uranium or uranium supply, which are largely the things that dictate the price of most companies that are involved with uranium, right? Like SROF or Ura or CCJ. Like most commodity focused stocks are priced based off of their, well, the spot price of their commodities and futures, right? And so yeah, I highly doubt it means anything. Can you talk about the White Line Degen Chapter 11 play? I have $100 at risk in it, and if it doesn't go to 10,000%, I'll be financially ruined. I don't know what you're talking about, Poopy Pants. I'm bullish on Nvidia moving up this week, and I want to know your thoughts on a bounce off of 406 to the downside, which leads to a test of 436 sometime this week. Why? Don't get me wrong, 400 probably has some support, but earnings are the week after next. I didn't see anything on NVIDIA's options chain that would indicate a reversal. If anything, I mean, NVIDIA kind of looks not great. Put interest has been rising pretty steadily over the last like 3 days. Call interest has remained fairly flat. Charm's picking up a lot, so I think people are buying short dated puts. I mean, Nvidia could, and it's below gamma neutral, and delta neutral's falling off. Nvidia might start to like push into these puts and accelerate. Yeah, I'm not sure the bullish side of that looks very good. Is there a thesis beyond the prior support level, which arguably is at 375 or 372? Or it fails 406 and tests 388. I mean, it could go below 388. Yeah, I mean, I don't particularly see a lot of bullish positioning here. I mean, it looks like a lot of sold calls just out of the money and a lot of long puts. 390, even 380 doesn't look impossible at this point. The nearest call interest is like 425, 430, and most of that short calls. Hey, don't get me wrong, like some AI news could come out and probably totally reverse the trend, but right now it looks pretty fucking bearish. I checked DVN today. They seem to lag the energy sector. They missed earnings, and I found that they have gas-heavy production. Could that be an explanation for the lag? Could it pick up on a gas reversal? Yeah, I mean their exposure to nat gas and oil prices is generally a little more mixed, which for now has been largely padded with the bigger dividend. I don't think their earnings miss was all that bad, and mostly in line with earning misses across the sector. But yeah, they do benefit from a rising natural gas price a little more than maybe like Oxy or Zom would. PTRA? Putra? Doesn't make any sense. PDT is frustrating. However, I think when I think about it, it forces you to play trades smarter and be patient. You can't take every trade, so you have to pick and choose, which helps develop your skills. Yeah, I mean, since I've been fucking around with it, I've found that it seems to be a decent risk management tool if you try to avoid violating it. Although sometimes, yeah, you have to very carefully weigh when you want to violate it and when you want to take on the PDT and reduce the amount of available day trades you have. There are opportunities where it's ideal to just sell the contract. But it is a decent risk management tool. Mostly it's a pain in the ass, and I think it reduces your profitability. So I'm not promoting it as like a good thing. It's definitely not, but it can force you to be more considerate with the trades you take. The only bullish thing I was were a ton if in the money puts that expired on Friday. What? Earnings pumping green macro pumping tech this week? Yeah, but tech pumped a few times over the last week and Nvidia just kept slipping, right? So I'm not sure. I'm not sure, like based on the positioning on it, that it's going to benefit from a turnaround in indexes. Don't forget that as the price falls, it loses weighting, right? And I don't expect indexes to pump egregiously, but maybe like 50, 60 BPS. The worst part about PDT is position close only. Yeah, it's bullshit. That's a speculation regarding Niger limiting trade and a pipeline being built there due to the coup, energy, the MOAS. I'm not really sure how big of an effect that's going to have on global energy prices. I mean, some, but not. I don't think enough to like squeeze energy. What are your medium-term expectations for UPS given the new Teamsters contract implications? I didn't have any. I was short UPS, long FedEx for a little while. That went pretty well, and then I haven't really touched it since. I don't even know what the new Teamsters contract is or what they've agreed to. So I don't think I could weigh in on that. I think a lot of people think it's far more important than it actually is. There were a lot of in the money puts on the video that expired Friday. Possible on hedging? Maybe, but I don't know if that's going to get it high enough to fall back into like the or push up on the short calls, right? Like the short calls above 420, like even if the is de-risking from contracts on Friday, that you need more momentum than that. You got to get people to start pulling back the short calls they've been selling as it drops. And to do that, it's got to shoot back, kind of back up over gamma neutral, which is pretty far out of the fucking money right now. And it's got to go back over like 430. I don't think there was that many contracts expiring, and total like put OI increased on Friday, outside of the expiring contracts. So yeah, it still doesn't look super bullish there. I mean, it's Nvidia. Don't get me wrong; it could, but I mean, none of the positioning on it looks like it will. If they can't reach 4,500 or higher by Wednesday, do you think they stop trying? I mean, they kind of need that strike back out of the money by Friday, right? A big chunk of that Vega risk expires on Friday. Uh, and it's yeah, it's still pretty significant. Like 216 million, and they're $40 underwater per contract also. I feel like even if they fail by Tuesday, unless we slip 4450 and they have bigger problems, they'll keep trying for it. Niger is only 4 to 5% of the world uranium supply. I'm not sure about other energy sectors. Yeah, not sure either, but I don't think it's. I'm not sure the exact numbers, but I don't think it's that significant. Have you talked about Tesla or Netflix? No? I could kind of go over them, I guess. Ooh. Tesla's kind of starting to fall back into its old trend. Close the week below 250. There might be some. So I know there was a lot of puts at 240 last week. Call interest is still declining. Still above gamma neutral though. Yeah, we might see like a bounce on gamma neutral on Tesla the first few days of this week. Delta neutral and gamma neutral both falling off pretty hard. Yeah, I would say there's a chance that it bounces maybe back up to like the 250, 258 range. So here or here would probably be my targets. This is one of the picks for tonight anyway. But I'm still thinking about some things. There's some interest on the options chain that I want to look into because there's calls at 250, but I'm not sure if they're bought or sold. So I wanted to look at the time and sales and see where they came in. If they came in on Friday, which I think they did, they're probably bullish. And if that's the case, with delta neutral basically, or gamma neutral right here, I think there's a decent chance that this sees a small bounce. And even on the technical side, a bounce back to like the trend line here wouldn't be out of the question, right? Which would put us at like 250. And then maybe a small breakout, which would be like 256 or 260. UPS play is done for now. Find something else. I mean, I don't know. I'm just not really paying attention to it right now. You can try to play it if you want to. I don't really have any interest in it. The interesting stuff's over, right? Buy the rumor, sell the news. Is this moving company called Yell? They may be going bust or not. I mean, they filed Chapter 11. They may have new investors or not. Do you want in? Absolutely not. Shareholder equity will be destroyed. They'll consolidate into the most profitable parts of their business and reconstruct after the Chapter 11 restructuring, right? Hey Greg, reading Win by Not Losing, learning about streaks. Holy moly, a lot of things make more sense now. Have you read that one? Win by Not Losing? I don't think so. So, any advice on resting options as a strategic investment? What? UPS will probably be refreshing its fleet in the short term to avoid contractual obligations to have functional AC and vehicles purchased in 24 or 25. Well, if that's the case, that's going to be a big capital expenditure. I would expect their earnings to suffer. Um, so I guess you could do something with that. What type of positions would you suggest for being on vacation for a week and only be able to check in on the market twice a week? I was thinking monthly puts at 0.35 delta plus hedge. I mean, if you can only check, how are you going to pull back your hedge? Like, if you can only check twice a week, twice a day. Oh, okay. 0.35 delta puts plus a hedge. What hedge? What's the plan for the hedge? Why not just get like leap puts with like a leap debit spread, right? Then you don't have to worry about theta. If you come back and it's in the money, awesome. If it's not, you're really not going to be down very much, right? Or like a calendar spread, so you get better expiration on the short put. I don't know. That's seems better than having like a what I assume you're referring to like a strangle. or something. Any advice on reading OAASI? Like, best way to get through it? I mean, you can use it as a reference. It can be information dense. I mean, the first time I read it, I just read it. But I do understand that it's a lot. So I mean, use it as a reference for positions you're thinking about taking, or maybe positions you're paper trading, or strategies you're exploring, and then that might kind of help break it up a little bit. Although understanding how options work and Greeks and pricing is essential to trading them. So the sooner the better. I think Tesla will bounce at these prices until they shut down a few places for upgrades and maintenance. I mean, I think if we see another big slip in indexes, Tesla will definitely feel the pain of that. I, like I said, I don't. I've told you before. I don't think their business is very competitive over the next like 3 to 5 years, and I expect significantly more contraction in the sector. So I don't think it's going to get better either. Also, the yen price action, and with their CPI and other data coming this week, CPI could have a big effect. I mean, USD JPY hit like 145 uh briefly, right? It's probably going to continue to pressure that. Uh I mean, 145 doesn't put Japan in a dire situation, but it definitely puts them in a situation where they need to step in with short dollar, long yen, right? 150, I think their economy starts to suffer significantly. 155, and they're going to start to drive like hyperinflation. So, and the situation gets really, really desperate. So I would expect somewhere between 145 and 155 that they would have to take some kind of action in order to stabilize the value of their currency. Probably closer to 150 given their historic resistance to change. But 145 is significant, and if they can't sufficiently fight back against the market, they could lose ground really quickly, or pressure could just continue, right? So I mean, they can go long yen, short dollar, but if everyone's working against them, they may not be able to not be able to stop like the upward march, right? And if they can't, then yeah, they're gonna have to do something drastic. It's a big deal. I mean, 60% on Netflix. Oh, somebody asked me about Netflix too. So yeah, Netflix fell last week. It's starting to approach the bottom of its like long term trend here. I would start to watch for a bounce. Um, I said this before, and I still think it's true. Netflix is probably one of the more fairly valued of the FANG stocks. So I don't think it's unreasonable for them to find some support between, here and 400, especially if indexes turn around in any substantial way. If it slips resistance, that could be another signal to short, like down here. But playing this range, I probably wouldn't, or at least I'd like straddle or something, because this is you really don't know which way it's going to break in here, and Netflix isn't led enough by its options chain to tell definitively. So unless there's a big move in options, like there was when I entered the short play, then it's kind of hard to tell. if the options are going to have a significant influence over the share price. Any advice on maintaining confidence in the position, catching the bulk of the move, etc.? Well, there was a bounce there end of day Thursday, before it continued to bleed off Friday. I took some profits on that bounce. Probably the bounce most people cut at. I left some of the position open. Like I closed my puts and left my debit spreads open into the next day. The next morning, markets were looking kind of strong, so I cut about 50% of the debit position, or the debit spread position, and then I held on to the last remainder of that into the end of the day and closed those out before close. But I mean, yeah, scaling back answers most of that question for you, right? If you have a sufficiently large position, you can just kind of scale it back as you continue to realize the price action you want to see, right? You don't have to close everything all at once. You can close some of it and leave some open, and you can just keep doing that as it continues to advance the direction you want. A little spoon to the bounce and cut there. Thanks. Yeah, I mean Netflix can move really hard on a bounce, so it's not unreasonable to cut. Sure, you could have made more, but you made money, and that's all that's important. Seems silly asking, but what do you mean by FANG? FANG is like Facebook, Amazon, Apple, Netflix, Google. This has kind of been replaced by like Mag 7, which is these stocks. But it's just a colloquial term for grouping together the largest tech stocks. No problem. All right, so I think we covered SPX expectations, GME, Netflix, Tesla. Obviously, the plays I'm looking at this week, I'll write about tonight. Upstart looks like it might find some support here. There's definitely reason for puts to take profit. Very much in the money. I took profit on some on Friday, so I would expect that we'll see some put profit taking. That might be able to buoy the price back up to maybe like the I don't know, $40 level. Maybe not that high. Obviously, look for index being strong or a turnaround in Nvidia. With Nvidia continuing to fall off, that could just add additional drag to this. So be careful with that. But it does look like we're seeing some put capitulation there. Mantang, Meta, Apple, Nvidia, Tesla, Amazon, Netflix, Google. And then yeah, okay. So let me see what the guys are up to. What's up, Dork? Oh.
What's up?
Hold on, let me turn you up.
Oh yeah,
There
you're
we
about
go.
to
That
do
should,
the
I think that'll
complete the
do it.
cycle of turning me up a bunch, and then next time someone subscribes to Dillionaire, you blow everybody's ears out.
Yep.
Love it.
You've learned my tactic.
I know this is all just to slowly condition the viewers into falling in love with you
Yeah, yeah.
in some weird Stockholm syndrome way.
Mm-hmm. Yep. And then I'll have my army.
Army of what?
I don't know yet. I haven't thought that far ahead.
Hey, you know what? That's par for the cult leader course. So
Yep.
that's cool. How you been?
We prefer to be called a militia. Doing all right. You?
Yeah, doing good. After this, I got to do some weekend work. Everybody at the company's got their hair on fire because this big job slipped through the cracks until it was like supposed to be like a 3-week job, and now it's turned into like a 3-day job. So we're all just kind of going nuts. But I'm doing good. You know, I did some engineering stuff on it, and I actually got to do math for my work, which was pretty cool. So I'm kind of like the main reason why it was going to take so long is what I'm doing now. Like I kind of just took the brunt of that, so it's been crazy, but it's been kind of fun. And I've been lucky enough that we were already proving the concept a week prior, so like I have a good idea of what I'm doing, so I'm not that freaked out. But yeah, doing good. It's a
All
good
right.
weekend.
I mean, I got kind of drunk on Friday and then more drunk last night. And then I mean, I've got work tomorrow, but I feel like it's way less demanding.
Yeah, well, yeah, that's true. I mean, well, yeah, we're gonna have like we got people they want to use the space on Monday afternoon, and we're gonna have to be like, no, it's some crazy fancy like dude, like people with their conference rooms, they get, and this is what tells me we like that these tech companies and just companies in general still have a lot of free cash. It's just I see how much they spend on their conferencing systems.
Yeah.
Like this one is like it's so over engineered, you
I
know,
mean,
like
if you're gonna say bullish things, you want people to hear you.
you want people who like you want your board of executives to walk into the room and have it instill confidence, and the way you do that is you cram as much tech as you possibly can into this one room for most likely a total of 20 people to use. Like they're probably spending close to like 15 grand per participant just in terms of the gear and the engineering services,
It's a
which is
drop.
which is
It's a drop in the bucket, right?
I know, right? It's crazy for me to think about how that's just a rounding error for most of these companies. It kind of blows my mind,
Yeah.
but but yeah, it's overall pretty good.
So what do we want to
Yeah,
talk about? Do we want to talk about Bank of Japan's dealing with the collapse of their currency, or do we want to go a little less bearish and talk about how long bondholders are also long vol?
I mean, dude, Japan's fine. Their currency's only at a 25-year low against the dollar. Okay, it's all good.
It's rapidly approaching a 33-year low.
I know, right? It's pretty nuts. I mean, I was just thinking about that the other day. Like it like and I feel like I've said this before, but like I don't think people grasp the importance of Japan's interest rates in
I
terms of
I noticed
being.
that in an argument that I had with Don Duck in the Discord the other night. There seems to be some confusion about how important Bank of Japan is in relation to the dollar. So maybe I'll clear that up real fast. They are the largest holder of US Treasuries outside of the Federal Reserve. Um their economy has piggybacked on ours since the end of World War II. And so effectively they are just kind of part of the dollar. And if they were to rapidly increase their interest rate in line with our current federal rate policy, it would create a probably a collapse in almost every securities market, um, and probably a collapse of liquidity in treasuries as well,
Oh yeah, it would create the credit crunch. Like, and so and
instantaneously.
yeah, so just to kind of to break it down even more into like fundamental pieces, the way that lenders make money is they borrow at the short end and lend at the long end, right?
Mhm.
And ideally, you want to do this in the same currency because that reduces your risk. Um, but right now, with the heavily inverted yield curve in America, being able to borrow short and lend long purely in USD is impossible to do profitably,
Yep.
unless your premium on the long end is insane, right? So, and that's risky in another sense because then you're in counterparty risk, right? And counterparty risk is not as fun as something else. So, what I think institutional lenders are doing, especially prime lenders, are doing, and I mean it just makes sense from a business standpoint, is they're borrowing short from the Bank of Japan, from their short end, and then they're converting to U.S. dollars by buying treasuries and then lending at the long end that way, right?
Yeah.
So, and that's how they're able to maintain a profit margin on their lending. And that's basically how liquidity has been flowing in the market ever since interest rates have gone up, right? Where once they crossed that threshold and they became inverted, at that point you need to search for you need to search for yield more creatively. And at this point in time now, I mean, unless you want to deal with crazy volatile currencies, which the Japanese yen still isn't too volatile. I mean, it is, but you know what I mean.
Yeah.
Uh, so the only game in town at this point is the Bank of Japan.
Well, for a little
The
while there, it was the lira also, but that's no good anymore.
Yeah, lira is crazy volatile now, so you don't want to get involved in that. So it's pretty much at this point and like I it really kind of hit me like over this weekend and the past week. I was like thinking to myself, like, Japan really is kind of like, if you think of this like a war against inflation, it seems like Japan is the only inflationary like monetary source left in the world, like that's actually like significant.
Yeah.
So it, like, for them to close that inflationary gap, that spread between their short end and the American long end, is 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 catastrophic to liquidity,
Yeah.
right? Because your access to financing dries up like significantly each time that, like, when the gap closes by 50%, your availability of liquidity is cut in half.
Yep.
So it's very significant. And if they peg to the dollar, right, that's like instant credit crunch. I mean, even like we can even get a credit crunch without that. I mean, if they just loosen a little more, like to like 1.5 or 2, right, that could cause tightening credit, significant enough to put real stress on the financial system. So it's like the knock-on effects of the Japanese rate decisions. It may seem really silly to someone who's thinking, "Oh, it's just Japan, right? It's just this tiny little country," but their monetary system is not tiny, and it's by design, right? They kind
Yeah.
of were created as this inflationary conduit. Um, at least with their current yield curve control policy, that's what they became.
Yeah.
And I think they're just now seeing, they saw it in 2008, and now they're seeing it even worse, the tail risk of doing such a policy in the face of a tightening U.S. dollar.
I mean, there's the other side of this equation, which is that banks are probably you have to consider that bank risk desks are probably prepared for some kind of Japanese tightening scenario, right? I mean, this
Of
isn't
course.
this isn't just data we're looking at, and but even as they slowly back out of that positioning, right, where they're borrowing short against BOJ, um, the spread still narrows, right? And the narrowing of that spread can encourage our Fed to cut rates. So it can really go either way, right? Either
Yeah.
Japan raises rates or JPOW cuts them. Either way, you have the same effect because
Yeah.
of that currency pair trade.
Yeah. And that's the thing, is like the currency pair trade has to almost reverse, right, in order to get credit conditions back to where we're, borrowing domestically. And yeah, I'm sure they're looking at this and stuff, but even backing out of the trade in itself, if you're backing out of that trade, that means
You're
that
still
you're,
drying up liquidity. You're tightening
yeah, yeah,
financial conditions.
exactly. Yeah, you're still tightening credit, albeit organically,
Yeah.
right? And that's the and I'm sure it's been happening since the beginning of the year, when Japan made their first decision. But I think that the second decision made by Ueda kind of, shows the global financial system that he's not going to allow the yen to get crushed, and he's going to make moves. But I think he's still trying to be careful about how he does it because I think he and J Pow very clearly understand the ramifications of what they're both doing, right? Independently, but as a group, what they're doing, right?
I mean,
So
I do question, because yes, the central banks more than anybody understand the risk of collapsing the spread and the carry trade there. But I do wonder how much of the continuous rise in U.S. rates, despite the fact that it's doing nothing, is to offset the risk of the spread between the USD and yen.
I mean, with the short interest on treasuries, I mean, it's a valid, argument to make that there has been an effort to keep yields high, especially when demand for treasuries goes up, right? Because the risk of that spread collapsing is really high,
Well,
right?
now we're getting into the back half of the year, right? Past the 6 month bills, right? And approaching the one and well, the 1 year and the like the 2 year coupon cutoff, right? Um, and you know, I've dismissed Jay Fresh's opinion in the past on are constantly rising rates becoming additive to inflation, but we're actually starting to approach the point where they are going to. So like I
I'm
don't think
sorry.
they've
Did
I
I
don't
did I
shut
just
up for
hear
a
I was
second.
right?
Hold on. You weren't right at the time, but we are starting to approach the time where you will be right about that. Especially if we see the Fed continue to raise rates. If we go up another 50 BPS this year, I would say by like quarter 1, quarter 2 of next year, we're going to have, we're going to have inflationary pressure from the amount of money that the Treasury is paying out in order to manage our debt.
Well, did you notice too that the largest buyer in the last auction was the Federal Reserve?
Yeah,
No,
but that was also a
that's fake news.
mandatory buying period.
Yeah,
It's
yeah, it's fake
I
news.
don't think that was it wasn't QE or anything. It was just they have
They
mandatory buys. And I don't know why Twitter fucking economists decide to ignore that. They're like, the Fed's buying bonds. That's QE. But the Fed has to. It's mandated. It's perfectly normal, and it wasn't an
my
excessive amount.
I don't know if this is true, but my understanding of it was that they have a set level of QT that they don't want to exceed, and if they exceed it, they buy. And so they had more than 60 billion or something coming off the end, and so they bought some.
Yeah, I
Interesting.
mean that's part of it. Yeah, but they also have constant buying programs that are always in effect. So, but it's not like they're
Yeah,
dumping like 500 billion into like 30-year notes or something like that. It's
yeah. I mean, someone's got to have a negative balance somewhere, right? It's
yeah.
the Fed. The negative balance is the Fed.
You see, this is why I love the Sunday stream because we go over things like this that FinTwits say and that is popping up, and then we kind of talk about it. And then
Yeah. No,
I love,
FinTwit is great for finding interesting information, but they're really terrible at processing it and placing it into context.
I see
So
most of
like,
FinTwits say
It's
big
like a
number. Oh my God.
gross data aggregator. Like
yeah,
you can get all the data in the world, but it's all misinterpreted.
yeah,
Yeah.
well, it's like an information screener of just like a what's the buzz in the finance world? What numbers are people thinking about? It's interesting. It gets you on a potential rabbit trails, but their initial analysis of it is usually completely wrong. I mean, it's basically super stonk by a different name.
My favorite sentiment source nowadays is actually the place where I believe that institutional traders are going to the most, and that is Wall Street bets.
Hmm.
I mean, we laugh, but at the same time, you hear articles more and more about how institutional traders aren't looking for fundamental value. They're scrolling Reddit and they're looking for sentiment and looking at people's options plays. I I'm only 3/4 joking on that one. Let me tell you, it's
Yeah, I think the I don't know how much of it is isolated to Wall Street bets, but I do think, yeah, I mean, they do certainly have sentiment screeners.
Yeah.
I mean, even Fidelity tries to make a shitty one for retail. Sentiment screening is very powerful, but I think mostly they're looking at the options flows,
well, yeah. So that's the same thing, right?
I mean,
which
yeah,
is just crazy to me.
if you have sufficient data, you don't need to look at Reddit to see what people are buying. You can just look at what people are buying.
Yeah,
Or
So,
selling, which they won't tell us.
yeah.
but-
Those buttheads.
But no, I just think it's crazy how it's becoming more mainstream than I expected, that they're basically admitting that options are running the markets. I mean, I see that narrative much more often than I would have expected, because that's sort of to the everyday person, as a media source that's basically there to manage expectations for large money. I wouldn't necessarily want to make that so widespread, because people
are you
might get.
trying to tell me that volatility is a speculative asset and not just a measurement? Hold on.
It's not just randomness in the market. No.
Hey, wait a minute. But the markets are efficient, JFresh.
Yeah, efficient at creating volatility.
Yeah, yeah. It
You
is.
think?
I
I
have
mean, you
noticed.
think?
What's crazy is that the like now we're having like the JPM guys and Goldman Sachs guys coming out and putting out articles basically talking about what we've been talking about since like August of last year. There it's finally I think what it is that there's no denying, especially anybody with access to an options chain can just look at the SPX 0 DTE chain and just say this is insane. And so people are asking about it, they're thinking about it, and I think at some point you just kind of have to admit that it exists and then say something about it and then hope it gets lost in the chaff.
I think we're just
But I
going to
mean,
see even more of what we see on SPX and a broader range of stocks. I know one of the European indices is adding 0 DTE options. Um, like this is just going to continue, right?
Oh, we're going to see an ETF soon enough.
the thing is, though, is that everybody, and I'm certainly guilty of this as well, just getting a little overwhelmed early on at the sheer magnitude of the 0 DTE options trading. But it kind of seems like now that we've sort of lived through a long enough portion of 0 DTE options, is that their net effect is actually to reduce volatility, ironically,
Yeah.
because you get so much faster feedback control on the price movement of the market. You kind of notice that even like this last week, like we were bouncing around quite violently in quite a small range as your feedback time constant decreases. So as you're able to respond faster to changes, that's exactly what you would see, right? You notice last year our swings were over weeks and spans, hundreds of dollars, and now our volatility is, it oscillates in the order of like a day, and it spans $80, right, and or less. And so I think that is a direct effect of the prevalence of 0 DTEs to more manage the price. So we might see a more orderly drawdown. I don't know. I'm not sure.
Yeah, it's definitely possible. So yeah, 0 DTE is kind of a double-edged sword, right? Because the whole free lunch thing. So you're absolutely right, because you're able to, like, it's like before 0 DTEs, the knob we had to for hedging was really coarse in resolution, right? We had like integer steps essentially, and 0 DTEs brought us into the float world, where now we have a way better tool to use to fine tune our ultra short term hedges. So any change in the hedge, like any big change in hedging, can be quickly countered with a 0 DTE pile of options that are significantly cheaper and provide you with adequate protection.
Yep.
But the danger with 0 DTEs comes in the form of when the hedge becomes highly directional, right? At that point, the zero DTEs can sort of become an amplifier, right? So
Yeah, if you overwhelm the zero DTs, it's going to crash fast and hard.
exactly, yeah. So and this is what I've been kind of hinting at. I mean, I've let off on this, but consistent selling like throughout the market, like let's say something actually spooks investors to sell their shares, that can really mess with the hedge if the selling outpaces the synthetic long hedge to your sell, right? When people sell, like a big institutional trader sells, they may want to sell, but they want to maintain half delta exposure that they could get rid of quickly. So what they'll do is they'll just do some sort of, long, leaning strategy on the back of that, which creates a damped downside effect. But if enough people are selling and not and they're just doing this shitty half-ass hedge or even just not hedging because they're that scared, the zero DTE support is just going to completely disintegrate, and it's going to be gnarly, right? And
So yeah, let
we
me
saw
let me let me highlight a couple of points on that real fast, just so people get it. Mechanically, downside in the market is more accelerated than upside due to the market maker selling into a negative gamma or negative vana or negative vega positioning, right? As price moves down, the market maker uh, picks up the speed at which it begins to go like long vol or short gamma, right? Um so this last week, we see a market maker whose overall net positioning is quite negative, and they're applying downward pressure on the market. And we see zero DTs being used to stabilize index prices against that downward pressure. But if we come to a consensus among participants that everyone goes down, right? No one's trying to prop it. It'll
right,
fall extraordinarily fast.
right.
Um,
Well, that's also operating under the assumption though that hedgers don't take profits, right? As they take profits on the way down, that also acts as a stabilizing effect. But if sentiment really does shift, like you're saying, yeah, like and they don't sell anymore and they just hold their positions or they move into more theta,
What
yeah,
if we were in an environment where all the puts are sold and there's nobody to close anything? It's or to open. You're buying puts to close, not open.
that's bad.
Yeah, I mean
It's the
the
same
the
I mean,
effect as
hedgers
buying
the
that's where
hedgers
we're
would stop
that's where
it
we're
from
at right
going
now, right?
down. The hedgers stop it from going down when they're all long puts, right? Because they sell their puts to close on the way down. But now all the puts are sold, so they have to be bought to close, which will just accelerate. I mean, this is why crashes happen.
Yeah,
yeah, pretty
This
much.
is why they're so this is why they're so rapid on the way down and the way back up in the modern options world is because it's just this effect. You're just gamma squeezing down.
yeah,
Yeah, you gamma squeeze down
And
and then you buy calls at the bottom once the solution is in sight, and you're going to get stability. That's when you go full bull and the market just rips.
yeah,
Plus
it's
people
gonna be
buy.
fun.
I noticed, Jay Fresh, you got a chart there showing a little bit of how.
Yeah, you want to show the Spix Fix?
Yeah.
Yeah, let me pop that up.
It's
Fix
just,
Vic. That's a quick acronym.
Yeah, so I've been showing this chart for a long time now. Essentially, during 2022, which you can kind of see from the oscillations on the left-hand side of the chart, we pretty much were following vol, right? Everyone was long vol. The price of the SPX followed the the cycling of volatility of the options chain, as measured by this normalized sort of SPX and normalized VIX that I've normalized to try to take out non-volatility effects. And then you kind of see in 2023, the orange line VIX just keeps going up, and it keeps dragging the blue line up with it, right? So the blue line tries to resist to the downside, and eventually it just gets pulled up. You can kind of see in March it started to fall apart, but then it came back. And so now, in the last week, the last couple weeks, basically what we saw, let me back up. This dragging up effect was what everybody else has been calling the blow off top for the last couple of months, where basically you're blowing up sold calls all the way up. That ended in the last few weeks, and I think we can all kind of tell that things have stopped just like exploding upwards. There's definitely more downside volatility. We're starting to actually see like strong moves down. I know everybody jokes about like the inevitable V, where like any strong move down is immediately met with a stronger move upwards. That's starting to break down, and that's because the squeezing of the calls has kind of run out of room. So what's interesting right now, is they are dramatically pushing against a downside move, right? So right now the market wants to move down, right? It has decisively made a decision. I want to go down. And the options market says, no, I don't want you to go down yet. and so it'll be really interesting to see who ends up winning this, right? And we'll find out by either rocketing back up to 45.25 this week, or VIX going to like 19.
I mean, I feel like
those
even
are like the only two outcomes.
I feel like even if we rocket up to 45.25, it doesn't really change anything here, right?
There's still nothing to squeeze, right?
Yeah, they can reduce short put exposure, but as they reduce it, they're going to just drive VIX up and price down, right? Because they're going to start buying those puts up. And they have to de-risk because VIX is still elevated. So despite the insane amount of vol control we've seen over the last week, shown kind of here in this chart, they've still not managed to risk off even the majority of their short put positioning.
Yeah, so I mean, just to give people like an idea of this, of how much the short puts are really propping up the market. So after a big OPEX, we'll see like a drop in total delta on the chain, and then it just slowly builds up to the next really big OPEX. The delta on the chain right now leading into this OPEX is pretty much at, in the range of the highest it usually is. Even from last year, you think about all the wild volatility. We have the same amount of delta on the chain now in this low volatility environment that we did back in that time of wild volatility, and in many cases even more so. The big difference here is not a lack of interest. In fact, there's actually more interest. The difference is the amount of sold calls is so large that an unwinding of those, even just into this OPEX, this week could get quite interesting. And it's not like I don't want to say this. The volatility is not low because there's less interest in options. There's more interest in options today than there was last year at almost any point.
We're already Delta's already beyond where we were at in August of 2022. We're looking at like negative 1.75. It's 1.76 trillion.
Yeah. So the big difference is that a lot of that is sold, and if that has to unwind, it's not going to be pretty, right? So I suspect, I'm not really sure what they're going to do. I mean, the last time this was pretty big back in, was it June? And we ended up just kind of chopping around. I mean, we went up a little bit and then chopped around. In that instance, we had a lot of positive charm, and there was a lot of sold calls that were still getting squeezed out. So they were squeezing the upside, but there's no more upside to squeeze, right? So
yeah, we also had a market maker that was positive, right? So that was stabilizing prices and allowing them to squeeze.
Yeah,
which we don't have now. A market maker is what, negative gamma and delta currently.
Yeah, they're just on the edge of delta. Well, yeah, if you adjust for skew, they're negative delta, but with just the naive assuming all puts are bought, which isn't true.
Yeah.
Um,
Can't make that assumption anymore.
yeah. So yeah, I mean, if our skew adjustments are to be believed, which they're not terrible, they're not certainly no guarantee. They were in a negative gamma and negative delta environment. Still in a positive charm environment, but that could change quickly this week. And if we go negative charm, I'd be very excited. And speaking of negative charm, Nvidia has negative charm.
I
going
know.
into
I
next
saw
week.
that. Yeah. I was kind of warning people about the risks of longing Nvidia right now.
Do not short vol or go long on Nvidia right now. If you're going to do anything, short it. Now's the time. Uh, obviously, there's no guarantee, right? We could see 500 by Friday, but it's looking good for a breakdown. Everybody's super short vol on Nvidia, very short, and currently, and people tend to passively short vol, right? And so that passive vol short is going to squeeze downwards because charm is negative, whereas in the past it's squeezed upwards. And if you start squeezing out some of those sold puts, it's going to get nasty real quick.
Yeah.
Because
I'm- Poopy
not many
Pants
people are
definitely
short.
going long Nvidia now.
Not many people are stupid enough like us to go long short on Nvidia. Most people own it and are shorting vol on it, and the upsides, but constantly the swings we've seen upwards are the short calls getting pulled back and reapplied at a higher strike. But that kind of behavior is starting to come to an end. So if you're looking for some downside, we could see it in the next 2 weeks. Obviously, we have earnings coming up. Not next week, but the week after, right?
Yeah. After, I think it's like OPEC's T+2.
Yeah, of course it is.
I'm just wondering when people are going to start asking where profits.
Not this quarter.
If we have a big down cycle across indexes, right, and it's just corrective and it doesn't destabilize, I would say that OPEC's T+2 is probably about where we would bounce. So like if we were to see an SLD and we were to see like even more positive positioning fall off into the expiration, right, and they start to buy back these underwater short puts, then I would say that OPEC's T+2, we probably see a reversal in the market. Kind of similar to what we saw in March 2022. The problem is for the potential for it to destabilize in the attempt to close those positions is really high. And then 0DT is only make it higher. So it'll be interesting to see how they manage to push back this week because long puts are also being bought. People are getting more bearish. People are starting to hedge tail risk, and all of that pressures their positioning even more.
Yeah, I think that the market is starting to get nervous about the price of oil and what it means for interest rates in the near future.
Well, we just got hot headline and hot PPI. The hot PPI was a big surprise to the upside too. PPI should have, for all the data, should have contracted a little bit more on this report, and we didn't see that, right?
It should have been. I think I was hoping flat was the print.
Yeah, flat on core with some continued contraction in headline.
Yeah,
and we got the opposite in headline. I think so. It's still really hard for me to figure out exactly where their like snapshot exists because there's so much information that's all over the place. But I think it's the last Monday of the month is where they have the cutoff, and so oil was actually slightly like Brent crude was slightly inflationary so that's why I think that's why we got slightly hotter headline prints across the board.
What if
But
that's a holiday that day?
I don't know, man. Don't ask me that. I I mean, with the seasonal adjustments and everything, most of the inflation report just seems like bullshit to me anyway.
Oh my god, when
Um,
I've like dug into what the seasonal adjustments were, I wanted to like kill someone because
but
people place so much value in the quarter or the month over month, and it's like literally
actually
just look at the
meaningless.
last year and they just try to flatten it out to make it a straight line, and then they apply that to the next year, which is great when every year is kind of business as usual. But right now, fucking meaningless.
Here's the fucking deal, right? Ignore all the seasonal adjustment bullshit and ignore the month over month. The fucking indexes annualized are both up a shitload this year, right?
Yeah,
Like inflation has not retreated anywhere besides those month over month stats and that seasonal adjustment. The CPI is up like the fucking 18-19% annualized now, and PPI is up as well. So the Fed's battle to keep energy prices down is ending, and they haven't made any headway on inflation at all. So we're gonna, I think next month is gonna be way hotter, and the Fed must know this.
Yeah, I
yeah,
mean, the market's pricing in still rate cuts Q1 24, which is, I just don't see that happening if oil prices stay as high as they are, and especially with like rice and wheat prices have been going up, as well. So there's
Well,
just like, there's not room in the commodity space for a rate cut to take effect.
that gets tricky, right? Because if you go last September to this September, we've got the 1 year note on that last 0.75 increase coming due, and now continued rate increases are going to start to become inflationary in their own right, and that's just going to accelerate, right? The more time that passes that we keep rates at this level, the more inflationary and continued interest rate increases are going to become. This is, I mean, our inflation is not a product of over lending, and even if it were, our rate increases have made, they've had very little to no effect on credit tightening until Japan's most recent yield curve control policy change, right?
Yeah, and
yeah. I
that's
mean, you
go
think
ahead.
about like, the retail, we're all locked into 30-year mortgages, so we don't care. But a lot of businesses, a lot of the large businesses in S&P and others, they're locked into low rates too, and those are coming due quite slowly. I mean, I
But
think we've
they're
only
not
had
locked into low rates because those revolving credit lines, they're
yeah, they're
you know
revolving, but a lot of it, I mean, it's happening very slowly, right? And they're just sort of able to.
well, we actually see them not using their revolving credit facilities. Over the last 6 months, usage in revolving credit facilities has dropped by like $650 billion, which is fucking a
Ugh.
huge contraction. Yeah, they're not going to go get expensive money. They can't. They can't support their business models without free money.
I still can't understand why all these big companies aren't selling shares like gangbusters.
I
because
mean,
because all
because
those companies still have a lot of cash.
they're not economists or stock traders. I mean,
Yeah.
look at the breakdown of the .com bubble, right? Like everybody was running for the door trying to sell stock, but they were all late. Like
Yeah, no,
they will, but that's only when things look dire.
yeah, when their forward projections start to not look so rosy, like there's like it's. I mean, like the economy is an aggregate of people who, above all else, want to preserve their nut.
Yep.
Okay, like
Would you
so.
describe it as a composition of men?
Yes, it's a composition of men with nuts that they wish to preserve, right? And so we're talking, I mean, from the smallest company to the biggest company, as a business owner, right? Your only fucking goal is keeping your employees employed and keeping food in everybody's faces and not having to, dump money into the company and instead get money out of the company. As long as that is happening, you're feeling okay, right? Even if there's like an economic downturn or whatever, if your company still has more dollars coming in than going out, you're feeling fine. I mean, even if you're a huge
I mean,
company, it's like it's not terrible, but it's it's okay.
That's
Yeah,
one of
but
the
I mean,
reasons like
even just
positive cash flows are so good right now. Sorry, Joe Rich.
oh, I was just gonna say, I mean, even just a modicum of forward looking, I don't think you would have. I guess my point is, and this goes to the federal government not raising taxes and companies not selling shares to raise capital. Like even a modicum of common sense, you should be able to convince a large group of people that, hey, we should have a little bit, we should get a little bit of a nest egg for the coming headwinds, right?
I don't
I
think
don't
it's just
understand why
happening
it's
until
so
so
nobody's doing it. I don't understand.
so these companies, their cash flows like that are still good. And they got a lot of companies got in on some solid, credit deals back in 21, and they're still riding high on those. But as people start looking to refinance and get more credit, they're going to start realizing that their cash flow is going to be severely hampered. And
Well, my
the
point is
plan
that this
is
shouldn't be a surprise to them. They should see it
it's not it's
coming.
it's not really a surprise to them yet, but I think the thing is everybody is banking on the Fed lowering rates or yields going down between now and the time they have to actually go into finance. And
What
it's
if
it's
they're just
Gotcha.
banking that Japan will have to raise their rates, and in turn the Fed will have to lower theirs?
I mean, well, yeah, the if
I mean,
the if the
those
if
actions
the
are reflexive.
yeah, if the global, I mean, I don't think these businesses are looking at the global currency markets and basing their
Why? They
decisions.
transact in yen. They transact in dollars. They should be. It should
They
be their
they're
CFO's responsibility. But I'm not saying all CFOs are great. I mean,
but I mean that's assuming that like Meta has like the same like a risk desk that's similar to JP Morgan's. No, they ask JP Morgan, hey, how are things looking? And JP Morgan goes, you probably get a better deal on your financing about 6 months from now. And they've been saying that for the past year. So
yeah.
everyone's just holding off and waiting because the people who actually track this stuff are really just kind of grabbing onto their nuts and plugging their nose as they deal with this shitty, risky, financing situation. I don't think so. Banks want to, like prime lenders, I think they're down to lend in the really short term using the carry trade,
Yeah.
but trying to lend at longer terms, like to these companies for 1 to 2 years, in a credit facility is just, I think that's insanely risky because of the added risk of the currency pair, right? So they don't want to necessarily have Meta come in and get like $100 billion loan that they have to go and finance through Japan, right?
Well, no, I mean
That,
they're buying U.S. Treasuries on the short end of the curve, right? Or mid of the curve, right? Like the 2 year. Um, but they're buying financial products for the longer end. Not treasuries, but like MBS, CDS. Like that's where they're gonna put that leveraged capital. So they'll put it into short term lending as much as they can to float their numbers, right? But they need to leverage it into longer dated plays. They have to, otherwise their net income won't be sufficient. They won't be able to make up for depositor demand in the event of, well, more than anything, I think they're not worried about a bank run as much as they are about additional capital requirements coming into the end of this year, right?
right, but I'm more talking along the lines of, like the conventional business of a lender, right? I understand that's what they're doing to find yield, but in terms of like someone coming to them right now in this situation and saying, "Hey, I want to borrow a giant pile of money," that to them, it's not only now currency pair risk, but now you're dealing with counterparty risk, right? And it's sure it's Meta, they're AAA, so you're not like that worried, but the risk is still there, and it's greater than the risk in, say, gigantic tranches of loans. Now you have one counterparty responsible for a shit ton of your assets.
Yeah.
So it's a different dynamic. I think that's why we haven't seen much of, to Jay Fresh's point, we haven't seen much of the offerings coming out to sort of shore up liquidity in these companies because they have no immediate need for it, and they're not going to have an immediate need for it until the quarter ahead of when they need to start, refinancing and start getting more access to credit. Because right now, they all still have a solid moat, right? They all still have these really good interest rates, and they're gonna lean on that and paint a rosy picture, and they're not gonna telegraph to the market that they need money until they actually need the money, right? And
Yeah.
the hope is it's kind of like the whole it's the I don't know which economic concept is this whole idea that hopefully they're the first ones to signal this sort of thing. And if not, then hopefully the sentiment around it is still bullish because of reasons. I don't know. Because people are stupid.
I mean, I think they feel very confident. I think they still feel very confident in their ability to go and get credit and get capital. And I think that they're all going to turn to get it at once and find out there's nothing there to get.
Oh yeah, especially if the carry trade, spread tightens, and so in the event that these large institutions do end up needing access to a bunch of money from the Bank of Japan, if those margins dry up, then the currency pair risk is only amplified,
Well,
and they're gonna
it's been
they're gonna say
drying
no.
up since December, right?
Yeah, but they're just these banks are like you said they're gonna show up and ask for the money, and the banks are gonna go, best I can do is half of what you asked for at twice the interest rate you want.
Yeah.
And it's going to make everybody very sad. And the real and this is where the financial markets intersect with the real economy is when the risk gets too great, access to capital for these companies goes down, and it's not necessarily the big ones you have to watch out for. They'll probably still get the capital they need because they have the cash flows to finance it. But the risk comes with the smaller companies running on tighter margins go to get financing because it's a tight spot for whatever reason, and they no longer have access to it. And you think about like if Facebook went bankrupt, right? A lot of people would lose their jobs. It'd be crazy. But the hidden lurking danger is not the Facebook problem. It's kind of like to extrapolate to global ecology, it's like the bees going extinct.
Yeah.
You may not notice that it's a problem until at some point you can't plant trees anymore, right? So that's kind of what happens as credit dries up, and as it makes less and less sense for banks to be able to justify their traditional lending practices on the back of a carry trade with a currency that's currently getting slaughtered.
Yep.
Like, and then the part where the yen is dropping so fast, right, against the dollar, that just tells me that the reliance on liquidity provided by Japan is increasing, right? It's not going down.
I
It's
mean,
not getting
look what
better.
happened to Japanese bond yields the second they loosened up, right? They just
Yeah,
immediately went to max. Like, um, so yeah, I mean and then were they like if Japan loosens their their uh their YCC out to like 1.5 or 2, right? Like you were saying earlier, in a more moderate approach, their tenure is going to immediately jump to 2 or 1.5, right? It's not gonna like slow creep up and try to get there. It'll just jump to that. They'll have to step in. Like they had what, 2 days before they had to step into bond buying programs after
yeah,
they announced the shift in YCC policy. So I mean, you figure 1 or 2 days, and they'll have to step in, and the higher the yield is, the harder it is for them to step in, and the more costly.
yeah.
Um,
Just to show you just how crazy reliant the globe is on this carry trade. It's not just the
yeah.
U.S. Everybody right now, like anybody who trades in the dollar, is going to Japan because they can readily exchange Japanese yen for U.S. dollars through the treasury market.
Mhm.
And so it's just the reaction being so instant and the effect it's had on the currency pair being so dramatic tells you everything you need to know about the health of the financial system.
So we're all really bearish, right?
I mean, yeah, but
How
let me
how do
weigh
they get
this with.
out
I
of
don't
it?
think we're going down this week necessarily. At least not until the latter half of it.
So how do we get out of like the impending global catastrophe? What's the way out?
I think. I mean, I think at some point. So we get a
Asset reprice.
slow creep up in Japanese yields and slow creep up in U.S. yields till we hit an inflection point. Then there's some collapse in the carry trade, as you know, either Japan goes even shorter the dollar or the U.S. tightens the spread by lowering rates before their debt payments become inflationary. Or they don't, and everything just goes to shit, right? We get hyperinflation, stock values go up 20,000%, right? Like, um, indexes just surge on the back of that, and the US dollar devalues massively. But I mean, I don't think we're gonna end up in that scenario, right? I
You know what
think
I'm gonna say, right?
what?
Peruvian bull is right all along.
Oh, Jesus Christ. No, he's not. Because Bitcoin's not going to save you, right?
Yeah,
Yeah,
Neither are
that's
your
like
GME
Bitcoin's worthless.
NFTs.
that's like riots at the breadline status, and I don't want to subscribe to that big of a bear case. As much as it's a possibility, I don't want to believe that's going to happen. I don't think J Powell's going to allow that to happen.
I think there's
Right, but
moderate
you see my
solutions. I
issue
think
here
there's a
is that
moderate solution here. I think they can force the closure of the carry trade over a period of time. I think we do need a crash at some point.
We need a
Or
repricing of assets.
yeah,
That's what we really need.
we need a steep correction in asset pricing. But I think if we can get that, and you know we can do it without disrupting supply chains too much, or you know, creating too much panic, that we could, it's not going to be a soft landing, but we could still have a landing, where
isn't
the
that kind of what 2022 was?
no,
No.
no.
Did you see home prices go down in 2022, Jay Fresh?
Huh?
Did you see your home value go down in 2022 by 20%?
No, but stocks did.
Who
That's
gives a
not
fuck
enough.
about stocks? That's not an asset. I'm talking about physical assets like homes, cars. Okay, so cars values did kind of moderate, so that's a
Well,
decent
no, they're
sign.
back up again, so they didn't.
Oh, well, okay, well there we go. So what I'm talking about, and Girk to some degree too, is we're talking about the fundamental valuation of assets. So, you know, when you have these MBS tranches and CMBS tranches, which those have been correcting very hard, which is a
Starting to,
sign that
yeah.
we're starting to moderate in that sense. But the underlying assets to those tranches, right? They're at massively inflated values. Right. And because of that, balance sheets, you know, for all of these large institutions that participate in this market are heavily inflated. Right. And so in order to kind of equalize this effect, because what that does is it creates a positive feedback loop, right? Where people see their balance sheets increasing, they get, you know, attracted to the investment even more, they go buy more MBS, you know, create more financing for new homes, you know, property developers build more, it gets bought up really quickly by investors, which has dried up as well, which is a good sign. But in order for us to sort of get the stickiest components of inflation down, we have to reduce the value of the assets that are, you know, the foundation
We
of
need to reduce
these.
the broad money supply. We need
Well, that's
wealth
the way you do it,
destruction.
right?
Yeah, yeah.
That's
But
the way
I
you
mean,
do it.
get to the core of it.
Yeah. So then, and that's ultimately what needs to happen is we're sitting around, you know, like a washing machine is like, I don't even know how much these days. A house is just, you know, even though the Fed has effectively completely put the housing market in cryostasis, right? And yet
Yeah,
somehow
it's being
it's not going to.
I think of the housing market as being divided by zero, right? The volume is zero, but the prices are still high.
Yeah, and so that needs to be, you know, rectified somehow. There's two directions for it to go, right? Housing prices flat, wages increase to match the cost of living. The other way is housing prices down, wages don't increase to match the cost of living. Those are kind of the two scenarios, one of which we need to have happen, but rising wages is inherently inflationary, right? So you're going to have this, you know, you're going to have the dog chasing his own tail trying to catch that, right? Because the closer we get to that point, the more the more enthusiastically people will take the quote unquote overpriced, trade.
But see, you're kind of burying the AI argument in here, right? Because what you're really saying is we need wages to continue going up, but we need productivity to catch up.
Exactly. Yeah, we do. And I think
AI.
the most inflationary impact on the economy we've seen in a long time.
I mean, it just seems like a fairy tale, right? I mean, if AI is the best answer people have to increasing productivity, it's not going to go up.
No.
No, well, I mean,
There's some argument that wage inflation could grow productivity over time, but not rapidly enough, right?
Yeah, and that's where it's inflationary.
I mean, I'm gonna be honest, this weekend I've been thinking about it a lot, and this may be the first time I've really had some faith in the Fed's direction. People are asking, like, why keep raising rates? It's clearly doing nothing. But we talked before about how they're just raising rates till something breaks, but something doesn't have to break in the U.S., right? As the U.S. raises interest rates, right? So, or raises our effective federal funds rate. They also simultaneously raise inflation in countries that don't have a matching rate, like Japan, right?
Japan's a perfect example of that. Yeah.
Yeah. So we're raising other people's inflation to offset our own. And we can force a reaction out of other countries and not have to make the decision ourselves, right? And I think this is why the Fed has held so tight to their MBS holdings, and they haven't shed any of them, because they know by raising rates they're going to force banks that are turning to Japan for lower interest rates to start shedding their MBS to de-risk, right? And so the Fed doesn't need to tank the MBS market. They can let everyone else do it. And so, I mean, there may be, it might not work is the problem, but there may be some end in sight there. I mean, the only thing left standing in the way of people buying, the 30-year at fucking 4% is that, they're greedy, right?
They're waiting. Yeah, the thing is that
But what if they're waiting? What if they're waiting for something the Fed's just never going to give them? The Fed just keeps raising and raising and raising until something breaks. I mean, it works in the long run. Don't get me wrong; it's definitely not a fucking soft landing, but it does work.
Yeah. No, I mean, I guess. Yeah, I just would like to hear people's best efforts as a devil's advocate, because it doesn't seem like there's any real way out of this, right? Without some pain.
There's no way out without pain.
There's too many people talking about a soft or a no landing. It makes me angry.
That's ridiculous.
Yeah, I mean, so here's something we should see if they are slowly closing out the carry trade, right? Especially since Japan's last announcement. If this is increasing the pressure on them closing out the carry trade, we should start to see the velocity of the M2 supply drop now. So moving forward, velocity should start to fall.
Shouldn't we also see the yen go up?
Yeah.
But it's going down.
Well, I like to think of that as a dip buying opportunity. And not like a continuous move downwards. Don't get me wrong, I've been longing yen for like a year now, so it could take quite some time, but they're very stubborn. But I mean, it is getting close to an inception point where it's the health of their economy for the next 30 years or making a decision. I don't know if Ueda came out this weekend and said anything, but I wouldn't be surprised if he did.
I think he said he was concerned.
Yeah, well, it's fucking concerning.
It's very concerning, dude. Like,
yeah.
Like if I was looking at this, like, and yeah, he's just, I mean, he's got to know. There's no way he doesn't know what his country is enabling.
He knows.
Yeah.
It's just, the thing
Here's
But
where I
but
don't
they also
believe
have
in
to
the
come out
soft
and
landing.
admit to the entire populace of Japan what they're enabling.
Here's why I don't
That's
believe in the
very
soft
embarrassing.
landing. Because we're all talking about the orderly unwinding of various trades, right? And that's just not what I've seen
We've had
happen
6 months of
in the last
fairly
few years.
we've had 6 months of very orderly unwinding since December, right?
Of short calls, I guess.
Yeah. I mean, but you know, money's continuously flowed out of equities. Risk in the carry trade is pared down. MBS has been selling off, but not at a great enough rate to offset the increase of home prices. So we haven't really seen any devaluation of those assets. If anything, we've seen those asset-backed securities move up in value. But you know, okay, yeah, there's not going to be an orderly unwinding, but there will be an unwinding. I mean, you can't have an orderly unwinding, right? Because the more and more participants create more and more chaos, and you know that's gonna just, and that creates volatility. Volatility creates fear. That's so yeah.
This is why
There's sure there's no
there,
such thing as a soft landing.
there is, so
this is
there's a
I'll
why
way
I
to
hate
unwind
humans.
orderly. There's a way to do an orderly unwinding, but it requires few enough participants with a similar enough strategy that there is an implicit cooperation,
which
right?
we
I mean,
had for 6 months. For
yeah,
six
that's what I'm
months, we have
saying.
had very, you know, very uh, consolidated effort to drive indexes higher and lower risk, right? Risk off, and for a very long
But
time we had
they're
broad
not risking
agreement.
off. They're
Well,
just turning the risk into a different risk.
they're giving the risk to someone else.
The equity risk, but they've
Yeah.
replaced it with vol risk.
Well, no. I mean, they've put the vol risk on the market maker, or short vol positions, right? So they've bought their insurance by offsetting risk onto short vol, and they've offset their equity holdings onto retail and mutual funds and 401ks and pension funds. So and now we see a less concentrated effort, and it's broken up. Right now we have people that are definitely going short, big players that are going short, and we're finding that the bull consensus is insufficient, right? So like I mean, we said this 2 months ago. Some people are out now, right? They were getting out then. They're out now. So whoever's left, they're the bag holders.
Mm.
Yeah, no one wants to, yeah, it's definitely, it seems like this period kind of reminds me in a way of January, right, of this year, where we have these sort of intraday moves down while liquidity is high, and then overnight when liquidity is low, we gap up, you know, around 40 basis points, you know, 50 basis points, and then we move right back down.
Well, they have the most leverage overnight. They're smaller now, right?
Yeah, exactly. So and that's what I'm like. This is, it's sort of one of those periods. I know after January we went up, but like no, we really were flat largely between Jan and Feb, right? We moved up and then we moved right back down.
And
Um,
really, we were flat between Jan and April, actually.
yeah,
Which is what we would expect from long positioning de-risking, right? Like we always discuss that on like a short term time frame. Like, how do you technically tell when you know, longs are selling? And if you look at that period, right, this is what looks like long selling. This is longs getting the fuck out of shit, right? We're stagnant in one price range on high volume.
Yeah.
And then this is a little extra, right? This was after the
That
bank's
was a
failure, and
squeeze.
yeah, that's where they squeezed out the shorts, right?
Yeah, that was an orderly exit of the shorts too.
Very much so. And now the shorts are out, but new shorts are coming in, and the new shorts coming in are that's where the risk is, because now the greater weight of participants are bearish. So not everyone's out here, but most of them are. And that's all you need, is you need that small shift in consensus, and then there is no more big VWAPs.
Right. Well, also
No,
in addition, we have to consider that, now that there's risk to the carry trade, and short-term lending is starting to look more risky, right? That I think participants are a little less willing to just jump right into these sort of like, leveraged upside pushes, whether it be from short vol, zero DT long. It's just less incentivized now, and I think we have been seeing participants back out of that liquidity flow, and because they're not as confident.
Yeah, I don't think we're
Um,
seeing this like the CTA participation in that zero DTE, but because it's overpriced now. We spent
yeah,
all of this period with zero DTs just being massively underpriced, and even this period, a large part of it. But in the last 2 weeks, we now see market makers appropriately pricing zero DTs, and thus the incentive to go long as fuck on them is gone.
well, at least at the money, right? Like out of the money, like zero DTs, I think are still pretty underpriced in terms of like what I think would be fair. Um, but yeah, you're absolutely right. Like anything near the money with impact on the hedge, it has been going up massively in price, and we're no longer able to as easily gamma pinch the SPX into a price range that we want it to be in.
Yeah. Well, you also, yeah, you just don't have, the whole thing was drive it up to find the buyers, right? And the buyers, didn't trust January, they didn't trust Feb, they didn't trust April, right? And they couldn't find them. And then they finally found the buyers from April, May, and June, right?
AI,
Yeah. And we
literally.
got that strong push up, but now almost instantaneously those buyers are priced out of continuing to buy that upside. And even below gamma neutral, you still find that out of the money calls are significantly more expensive over the last 2 weeks. And I was kind of talking about that earlier. The market makers are definitely, they're wise to this, right? And they are not taking on that zero DTE risk in the same fashion, and they are and we found some profitability in selling those calls over the last few weeks, because the market makers had started to price them up, and you start to see that when demand picks up for them, the market maker just charges whatever people are willing to pay, and that makes selling them very profitable. But that's now started to decline as the market makers price them up to the point where there's the demand for them is falling off, and we start to see the market makers separating that zero DTE pricing from 1, 2, 3, 4 DTE contracts, as they start to silo it off, right, and create, like, it's almost like it's its own risk basket now, and they're not hedging those zero DTE calls based on their long book positioning, right?
Oh yeah, like I think that the market makers have been having trouble for the past few months, especially with the massive influx of volume, just figuring out how to treat zero DTEs as a derivative, right? They are kind of their own special little asset class because of their ultra short term hedging, capabilities, right? You can't really hedge them conventionally. You can't really price them conventionally because it's like an OPEX every single day, and you have to treat it as such.
I mean, let's be very clear. The CBOE's customers are the market makers.
Yeah.
Yeah.
They're not going to create an asset class or a derivative that's going to screw over their customers. The market
No,
makers love zero DTEs.
Yeah,
I
I
don't think
agree.
they're having any trouble hedging them at all.
I
I
just think,
think they did in the beginning.
yeah,
I think they've definitely gotten it under control, and even more so recently. But I think at
I
the
think every
beginning
time
the
shortfall
volume
blew
of it was not something that they
Yeah,
had
that's
accounted
true.
for.
yeah, and every time these like short vol blow-offs happen, on the zero DTE side, right, it rapidly shifts the market maker's hedge. And so, I mean, they're probably fine with it, but if it's affecting their spreads, then it presents a problem to them, right? And that's where I think that they were having trouble pricing them with the appropriate premium and spread, uh, was that they were, as short vol blew off in mostly the upside these days, they would face wider spreads on their head shift. And so now they're trying to compensate for that, in the actual direct premium of the zero DTE contract.
Can we talk? Can we talk about a simple trade right now and why it's not a good idea?
Yes.
But
Okay, so I just did the very quick rough calculation of the risk premium on SP 500, 4.9%. 2-year bond, 4.9%. Why would I not just buy 2-year bonds and say, screw the market, I'll see you in 2024 or
This is what
2025?
you do, JFresh, is you buy the 2-year bond, then you take that and you use the margin on that bond to short SPX.
Okay, well, yeah, that's even more of the, okay. But like,
position,
I'm,
it's a good
I
one.
can't be the only one that looks at this and says, why not just take the free money? Do we really expect multiples to expand that much from here?
I think they
It's
expect
yeah,
yields to. I mean, given the enormity of the short yield, like short treasuries positions, they expect yields to go up. But
Yeah, but that only works until it doesn't, right? And then
yeah,
it's too late, right? Because
well,
everyone's
yeah,
going to
because
run
you want
for
to
it.
be you want to short it while you're buying it, right?
Yeah, I mean, I'd rather just own them now, take a little bit of a short term hit, and probably in the next 2 years they'll just go up in value, right?
Whoa, whoa,
Whatever's left.
whoa! Buy the 40-year meta bond and short meta.
Yeah, but I mean, you could even do something even crazier, like the 20 years 4.4,
Yeah,
right? That's not terrible relative.
I
I
mean,
mean,
I'm
it's
not gonna
half
go
half.
short the SPX for 20 years.
Well,
I
you
think
could.
I think the reason
You
why this
could.
like there's a reason why the equity market hasn't suffered in favor of bonds. It does have to do with the short position, but it's also that, I mean, at this point, right, if we just turn on our squirrel brains, right, our rabbit heads, and just look at the here and now, the economy is not doing that terribly, right? So and because of that, betting against the equity market is just, it could be disastrous, right?
But
I mean,
you don't have to bet against it, right? You just have to not bet on
you
it,
are
right?
betting, you're effectively betting against it by going long treasury yields because,
Yeah,
treasury doesn't, doesn't fluctuate in price unless you're trading
but
it.
worst case you're likely to do as well as the market, and best case you're likely to do much better, right?
No, worst case is the market appreciates by 12% and you got 5%.
But that's what I'm saying. Are we? Is anybody really expecting multiples to expand that much?
There's a risk of it.
Eh,
It's the risk alone is like enough for a lot of people to not want to take that trade, and it is a lot of like a weird version of FOMO, right? But by switching your asset allocation to bonds, you're sort of sacrificing the potential for a greater yield, not only in dividend but also in asset price appreciation on the index. So I understand the hesitancy, and that's kind of once again why the market tends to crash, right? When things look bad, right? That's when people when growth is tangibly not doing what people expect. Like right now, we expected a drop in earnings, right? But if that continues in Q3 and Q4, you bet your ass we're going to see people moving into bonds and out of equities, because that shows that our predictions were not correct, and we may be in for a more protracted, period of stagnation than we thought. Just once again, not talking about us, I'm talking about the broad consensus, right?
Yeah.
So that's kind of, I understand it. If you're an asset manager, and everything, you look at the data, you read the news, you see what the forecasts are, and everything's sort of in line. You're like, all right, I mean, everything's sort of in line, which inherently is bullish for equities, right? It's just by the way the market functions. So and I mean, if you look deeper, obviously, we are part of the counter trend to that, because we look deeper into the data, and we sort of come to our own conclusions. But if you don't have the time to do that, that's the opinion you gotta go with, because you don't know any better. And as a responsible person, you have to take the data you're given and make a decision based on that. And that's what they're doing. But as soon as future growth is not in line with what the forecasts are, yeah, people are going to start getting really risk averse, go into these bond trades. And we'll probably see. What's funny is we'll probably won't yields drop as much as due to that short position unwinding at the same time.
Yeah.
It's going to be really interesting, and that's what, like, the bond vol is so crazy high right now, because every time someone moves into bonds, someone moves out of their short bonds, and the yields just go right back up.
Well, don't forget that a lot of the longs on VIX, right, are like long volatility positions right now are hedging off that short treasury position on bonds, right? So kind of the no free lunch scenario. You can't go short bonds like that without some significant repercussions and volatility.
Oh yeah, for sure. And yeah, there's
Broad
a whole,
broad volatility, bond and equity, across the board,
yeah, as
and
that
oil.
happens, yeah, like the spreads and options are going to really widen out, more than we've seen them be at for the last 6 months. If there is a big move into bonds. But yeah, that's kind of my thoughts on why we haven't seen people, because it's been around now for about a month or so, where we've seen the returns of the S&P, like earnings yield on S&P matching pace with treasuries. That's not good enough to be like an attractive trade on its own. At this point, it's still a risk response trade. If earnings yields, so if the treasury yields were like 50% higher than S&P earnings yields, I would say that's a very attractive trade, and I think a lot of people would agree, at least over a 1 year time frame, right?
Yeah.
We would definitely see it at that point, but right now it just looks like it's there. Everyone sees that it's there. No one's really wanting to like be the first one in and then get burned on a surprise pile of beats from the S&P. So
I
that's
mean,
kind of
yeah, I mean,
test,
what
right?
institutions want to see is they want to see the top end of the curve match S&P estimated forward returns over 10 to 30 years, right? And what they've got is about half of that.
Mr. Poopy Pants, I like to have faith in humanity to the point where these financial professionals, they may not be wanting to be responsible, but they want to keep their jobs.
They want to keep their money.
Yeah.
That's the easiest way of predicting what people will do in the markets. Just remember that everyone wants to keep their fucking money and they want to make more of it.
Well, the best way to lose all your money is to lose some money and then have all your clients pull their money out. Then you've lost all your money.
It's pretty hard to get out of a lot of hedge funds.
I mean, well, yeah, it's true, but you know what I mean? Like, it's
Yeah.
just, it's a fulfilling, and so yeah,
How's
you don't want to,
Melvin doing? Great.
All right, so what are we thinking? Bounce to 45.25 and then straight down?
I think maybe 45.50. Look at the correlation index over the last 3 days. If they continue to stabilize correlation, they're going to slow down the entry to the dispersion trade, which gives them a little window before options expiration to pump the fuck out of everything, right?
Yeah, I
Even if
can
we
see it.
ignore SLD and OPEX and all of that.
I mean, it's pretty clear they're trying to. They haven't given up, right? I mean, they're
Yeah.
fighting against the market movement short term. So
The problem is they're
All they
now
do
the
is yen to
minority.
150.
I'm really hoping for one more bounce, and then I'm gonna do a thing.
Yeah, I'm gonna do a thing too.
All I heard was yen to 150.
If yen hits 150, Dork, I'm full porting, and whatever happens, happens. I might be living in
Wait,
your radiator though afterwards.
wait. Did we all just agree on like a forward prediction?
Did we?
I mean, I
Wait, hold
don't know
on.
about.
Dork, be the contrarian.
Well, okay. So you guys are pretty optimistic. You're assuming that liquidity is good enough to sustain a push up about 3% in the market over the course of what, a week?
3 days. I say 3 days.
I think it's gonna take like 2 days. Yeah.
Yeah, 2 to 3 days. That's all
Right.
that's
Yeah,
all they've
so,
got.
I mean, yeah, if that happens, if we push up 2 or 3%, I'm gonna get crazy bearish. But I don't in the stable, safe case where the market's not about to die, I see us maybe scooching our way up, 150 to 200 basis points throughout the week. So maybe like 45, 25. They just barely save those short puts, and then then we have OPEX, and a bunch of dumb shit happens. But I could see conservatively, yeah, a creep up a little bit. But in terms of if it's a huge concerted push, especially with the economic backdrop, we had China data being really disappointing.
China's been
Japanese yen,
disappointing for 6 months.
Yeah.
it's
Nobody
continuing to
cares.
disappoint.
Yeah.
Yeah, and I think that people are going to start extrapolating that to the global economy because they are the world's largest exporter.
Yeah.
Uh,
Well, they should have 6 months
so
ago.
yeah, I know. People are stupid into AI, right? But if Nvidia earnings comes out and they miss expectations by a little bit,
They're not gonna miss.
yeah, they're probably not going to miss. But if they did miss, right, or they just barely matched, then I think that we're going to see a muted response this time because the hype has worn off. Everybody who got in on the hype is in on the hype.
They're underwater
Uh,
on the hype.
they're underwater on the hype. So, yeah, my contrarian view is not up as crazy hard, but I guess I'm a little less bearish than you guys in that regard. And if the market continues going down into next week, then we'll probably see the continuation of this slow, sort of heavily resisted downside, where we just kind of go up in pre-market, then down in regular market, as they grab onto the liquidity. But the short position, the short put position is going to be defended. I think next week is their goal to defend it, but I don't think that they're doing it too quickly unless they're trying to get the fuck out, right, of those
Well,
positions.
it's not that they let me be clear on my projection in this. It's not that they want to do it too quickly. I think they have to do it quickly. I think
Yeah, they have to do it
they
quickly
need
to
to
get
get the
out of
indexes
there.
up above where they're currently being stressed, right? They need to gain ground on 4475. They need to probably gain ground on 4500. And if they don't do it fast enough, they're going to lose to the continued accumulation of longer dated short positioning.
That's true. Yeah, I
Yeah.
could.
So,
Okay.
and I'm looking at from Friday. I'm kind of looking at the change in delta for the market maker, and it looks like there's a nice little, a pretty little gamma ramp to the upside to like 45.50, which is unfortunately exactly what Kirk just said. But
I've already looked at the options data pretty extensively, and I think the shedding of zero DT positions that expired in the money on the put side Friday left a lot of. So Friday they started. Here's where it gets interesting. Friday the call side started to buy the 3 DTE, the Monday expiration, into the end of the day. On their last two pumps, we were like, wow, we're really not seeing like a lot of call accumulation on the 0 DTE side. And it's because they were buying the 1 DTE to get that extra delta leverage. So opening tomorrow, we have a shitload of 0 DTEs already on the chain to the upside. Now, we could realize that in futures in pre-market, open at 4,500 and then just collapse, right? So don't necessarily think this is bullish for anybody's positionings unless you're straddled over the weekend, but it's there, right? They were buying that extra delta leverage into the weekend, and they were selling 0 DTE puts, so or 3 DTE puts. So yeah, they're pretty heavily leveraged to the upside, and there's less contrarian positioning at open tomorrow. Futures tonight will have a big effect on how much of that delta is in the money by market open, right? But if enough of it is, I think they've got their foothold and they're going to push it as hard as they can. Because if they don't, they're fucked. It collapses. We collapse through 4,450, and then probably almost immediately through 4,400, and that's across the chain like $20 billion in Vega exposure flipped, and the market maker is just gonna start longing vol like crazy, and you get VIX up to like 20, 30. So I think if they don't, I think if they don't, it's really bad. So I think they'll do everything they can to do it, and I think they've got a good position to launch off of.
If they lose it this week, if they don't get it back up over 4,500, it's not a very long way down to 4,200.
Yeah.
That's the thing is I think that the main goal is to just keep it above 4,500 heading into when they expire, right? And if they can hold it, and get that charm to really kick into the upside on those short puts, then, I think that would be the most bullish outcome, right? We close above 4,500 on Friday, like 4,525 ideally for them. Then they can take that money and just go and repeat the cycle and push us up potentially back to the all-time highs.
So if they push up here, they're going to be de-risking. So they're gonna be de-risking their short puts, which means they're working against themselves to close that positioning. I think if we do go up, they're gonna try to collapse that positioning as fast as possible and reverse price trend. So I don't think we close the week above 45. I think if anything, they try to pull back their exposure at 45 before the end of the week. We probably close the week closer to like 44.75 or 44.50, but then that exposure's got more time, right? So they can let vol after OPEX, they can let vol slip a little bit. They get a little more wiggle
Here's
room.
the challenge. Is that right now the indices are charm positive, which goes in their favor, but the Mag 7 or the Meme 7, most of the charm is either close to zero or negative. And so it's going to be a battle. I think this is sort of going to be a game of dispersion, right? Can the index vol shorts beat the the decay of the underlying vol shorts? And so it's just going to be this sort of weird mess. So they've got a lot of work ahead of them to get up to over 4,500 and keep it there. If they can do it, they might be able to wiggle out of some of this charm risk. But if they can't, it's gonna be nasty.
This is what I'd focus on this week: gamma neutral. If they can't get us above and stay above gamma neutral, they're gonna lose before the end of the week. If they can get us above and hold above gamma neutral, they might be able to hold until next week. And that's without any consideration for what SLD could bring, if anything, right? Because we haven't gotten one recently. I'm not going to bank on it. But if we were to get an SLD, they're just fucked. That could be a fear, right? If they think people are going to start selling Mag 7, not just short vol decay on Mag 7, but actually selling it, then they have very little
Game's
time.
over.
Yeah.
Game's over. Yeah, so they've got to get it above 45.25 and keep it there if they wanna hope to survive this OPEX. Otherwise, down downs, and it might be downs anyway.
Yeah, I agree.
It's called
Cool.
Man-Tang.
It's called what?
Man-Tang.
Man-Tang? Wow.
Something
Better
else I
not
actually
yeah.
wanted to bring up with you guys while we're here. And fuck it, I've already exceeded any doing anything else today. So we've got Jackson's Hole coming up. We should probably start a discussion about it now. Is there a positive outcome to Jackson Hole?
I don't know. Did we ask Jackson?
No, but you know he's busy maintaining his hole right now, so he's got to get it prepped.
Yeah,
I mean, it's all just fluffery, right? Just a bunch of people saying a bunch of shit they've already said.
Well, they're gonna make an announcement about rate decisions, probably.
Yeah,
If not an actual announcement about rate decisions, a projection of forward rate decisions. A cut is bearish as fuck. We know that. A pause or end of the cycle is also bearish as fuck. Is 0.25 the bullish outcome? I think that'd be my question. It widens the spread. It loosens the risk in the carry trade. It loosens the risk in the short treasury positioning. I think 0.25 is bullish. I know it sounds fucking insane, but I think
I'm with you actually. I'm following along here.
I think it's the bullish outcome. I think if they announce an end to the hiking cycle, it's going to get real crazy. And I think if they cut 25, all hell will break loose.
Well, I mean, yeah, they've been very. I mean, JPow's been very strategic about saying we're not gonna say like we're just pausing, right? Because they don't want everybody to just pile into bonds and create the the havoc.
Well, until they want everyone to pile into bonds. I mean, it may be the only leverage he still has. Because no one's listening to him on anything else, right?
He could sell more assets.
No.
Yeah, but
then it would be his fault and not the market's fault.
Yeah.
Silly. Yeah, so Jackson's Hole to me is a time for everybody to get on the same page, right? That's where the consensus is formed and the decisions, I think that's where we see the most concrete forward guidance from the Fed that we're going to get is once they've finally talked to all the central banks, all the G-SIBs and everything, they all get together and have their big fat orgy and in the middle of the at some point in the sex fueled hedonistic rage they talk about monetary policy, and that's why last time at Jackson's Hole Jay Powell went full Volcker was because everybody there was like, dude, you got to do something. And so he was like, all right. So this time around, it's going to be something similar. But my thought is that this Jackson's Hole, everyone's going to say, dude, we can't be doing anything right now. We just gotta just not do anything. And so he's going to come out and say, I am so committed to doing absolutely nothing that it's unbelievable. You have no idea how little we're going to do. And like he's going to think about the verbiage they've been using for the past few meetings, right? With this like whole we're gonna raise this time, but we're data dependent, and additional policy firming may be necessary, but we're gonna wait and see, right? I think that is just going to be put into fucking mega overdrive, and what we're gonna get out of that more than anything else, though, I think he's going to want to reinforce the idea of higher for longer and try to kill the projection of rate cuts early 2024. I think he's been
trying to kill that all year.
Yeah, and he's going to use Jackson's Hole to really just put his foot down and actually make a commitment. I think in terms of like what he's going to say is like, make no mistake, like barring
the way to do that would be to end the hiking cycle,
maybe,
but
but
not make a cut.
yeah, well, that's the thing is well, so they've been saying they're very data dependent, right,
Mhm.
this whole time, and that always leaves the market with in the back of their mind, like that means they're going to cut, as soon as conditions present themselves for a potential cut. But what JPOW needs to say is not only are we going to wait for the data to be back in line, we need it to be, convincingly so,
But
right?
now data is worse since the prior meeting.
It has,
We have hot PPI, we have hot CPI.
yeah, so
We have
exactly. So
PCE still, which could be moderate. I don't think PCE is going to go crazy in this coming month, but
no, our economy is weakening. So like the data is going to start looking, quote unquote promising because of that. But at the same time, if inflation is still high, I think that he's going to come out and say, there's no way that we can just drop rates, with inflation, rebound, starting to rebound, commodities prices up as high. He's not going to say this exact, thing, but with the way that pricing has remained unstable, we can't just come in here and cut rates. We don't, we probably are not going to cut rates in the first half of 24, right? Get that thought right out of your minds. And even doing that could lead to some downside as equity markets price in higher for longer. But I don't see it being as crazy as June or as last year, where he just, you know, dropped the Volcker bomb on everybody and said, I'm gonna fuck this shit up."
what would be
He's
the
not.
advantage to a surprise increase beyond 0.25?
If he mentions the possibility of a surprise increase,
He wouldn't mention it, right? He would just do it like he did it last Jackson's Hole.
oh, you're right.
I mean, why? I don't see how he could even do this because he runs the risk of being inflationary very quickly above this point.
And he also
Well,
risks kicking the banks in the balls even harder.
that's the point, though, right? Is you trigger the asset bubble destruction, and then you can pull back rates immediately.
Well, so the only reason he would do that is to try to pressure.
We've been saying he should do that for a year now.
Well, like the thing is if he does this, right, the yen just covered even more. There's no
The yen
there's
will
no.
crash. If he did like 1.0, the yen
Oh
will
yeah,
die, and then you're going to blame everything on the Bank of Japan because they'll have to peg immediately.
yeah. So and so
Fucking
I get.
euro might have to peg at that point. Like if we did a surprise increase to 1.0, the euro's been slipping too.
Yeah, I mean, and so yeah, there's
And
a
then we get
there's a
everybody on our central bank policy, everything goes to shit, and then we cut rates.
so the problem with that is that then the Fed is going to be accused of tampering with global financial stability.
Oh, because they've never done that before.
I okay, I'm just saying from a political standpoint. From a political standpoint, it seems a little silly.
Guys, let's be honest. He's gonna say the same word salad nothing burger about being data dependent that he's
Oh, yeah,
been saying for the last few months, and it's not gonna matter. Just
that's
because it
exactly what I'm
mattered
saying.
last year doesn't mean it's gonna matter this year.
He's such a little bitch.
He is.
I mean,
So many
everybody,
fun ways to kill this, and he just won't let it die.
because he's afraid, right? Everybody's grabbing their.
What's he afraid of? He's an old guy. He's got money. He's probably owns plenty of assets. He'll be fine.
He's
Assets
got
that are going
puts, right?
No, he sold the top. He's sitting on cash or bonds.
to, yeah, like I think I agree with Jay Fresh that he's going to be, all he wants to do is, I think, get rid of the idea that they're going to cut rates anytime soon, unless the economy, like unless unemployment goes up, he's not going to fucking cut rates at all, right? It's just a guarantee, and I think he wants to reinforce that, but then at the same time say we're committed to getting inflation percent target. Banks remain sound and resilient. You're going to remain data dependent and go on a meeting by meeting basis, rate decision, and then drop and walk away.
Here's a question. I don't really follow politics a lot lately. Sorry, that's nice. He's very excited about cars. I don't follow politics much lately. Do any of you guys follow politics? When did the Republicans or whoever's not in power right now start pounding the warhammer about deficits?
That would happen during the debt ceiling negotiations.
Yeah.
No, that's in 2 years.
And then they both sides of the aisle agreed that they liked getting paid. And they came to an immediate resolution.
No. I'm saying now, right?
Oh,
Because they have a deficit
2025.
problem. Well, I understand that, like, the debt ceiling will force them to have the conversation, but typically, I mean, you would expect somebody to start criticizing the massive deficit, right? And
Yeah, but it's too soon since they both agreed on creating a bigger deficit, right? So there's not enough. I mean, I don't follow politics much either, but I mean, strategically, it's way too soon because right now they're both under the magnifying glass from the Republicans were negotiating a shitty deal that didn't really reduce our debt problem at all and only expanded it. And then the Dems for pushing that expansion, right? So they're both equally at fault right now, and not enough time has passed for one to say it's the other's fault, right?
so there's unlikely to be any movement on our deficit, which would be another way to solve a lot of these issues.
Give me one second.
right?
I think somebody.
You
You guys can talk. I think someone just
Okay.
came to my door.
Yeah, I just, this is something that nobody talks about because nobody thinks it's possible in our dysfunctional political environment. But a great way to kill inflation is to raise taxes and reduce the deficit, right? And
Dude, we got way too many people gargling all over the testicles of extremely rich people to actually get anything past the raise taxes. Unfortunately, because it's partially billionaire ball gargling, and it's partially this notion that is not incorrect that our government will not take that money and put it somewhere useful in aggregate, right? So
they don't have to put it somewhere useful. They just have to burn the money through taxes, right? If you reduce the deficit, you reduce a negative on the books, you reduce a positive on the books too, right? That all has to balance.
Right, and that's why I think Republicans are leaning more towards reducing spending and less towards increasing taxes.
Sure, that's like the eternal fight, and why nothing ever gets done is one side wants to reduce the deficit by cutting spending, the other wants to reduce the deficit by increasing taxes, and never the twain shall meet. And here we are 30, 40 years later.
300 years later?
45 years, yeah, sure. But I mean, it's just really frustrating that it seems like there's been no political pressure at all, it seems to me, on the politicians who could also combat inflation in a much less heavy-handed way, right? Instead of turning one knob, they have much more control over the fidelity of how taxes are accrued, right? Even if it's just like an increase in the sales tax,
It's a lose-lose proposition for something that like their voters don't care about, right? So why pursue proper debt management when the average American doesn't understand national debt at all? It's just like a number. And then agreeing to like a higher income tax federally, or any kind of corporate tax increase is going to just simply be met with derision across the board, right? For Democratic supporters and Republican supporters alike, they'll lose campaign funding. So why would you just ever address it? There's no incentive.
I don't know.
Greater good, and like doing
doing
your actual job as a a representative of the American people, but politicians aren't that.
Yeah, I know.
So yeah, that's good. Yeah, so like ultimately, in terms of like the inflation problem, is just a symptom of the problem, which is irresponsible fiscal policy. And the way you solve the boom bust cycle that we have put ourselves in is through the leadership, right? It is through, more responsible spending, but the way to get there is not through the current, establishment suddenly having a change of heart and looking in the mirror and showing up the next day and saying, guys, I had an epiphany. We should just do what's right. Right. That's never going to happen. These people are all too entrenched. And so
I
I
mean,
think
the voter base is so polarized that it's become impossible to reach across the aisle, even if it's necessary.
So I kind of disagree with that. Okay, so the loud minorities have become more polarized than ever, but the silent majority just wants reasonable leadership. Well,
The
That's true
problem
to a
with the
point.
silent majority is they're silent.
Well,
Yeah.
that's true to a point. I mean, polls have showed that across the spectrum, the polarization is occurring, right? And that's what makes things difficult, is because now what once used to be a healthy purplish middle has now become a much more delineated bluish reddish middle. So it makes it much. That's why everything's like 51 to 49, right?
I have to believe, in order to not lose faith in humanity, that the pendulum's going to swing, and we're going to.
I mean, I can't wait until you get old enough to have lost faith in humanity.
I know, right? I probably got another 1 or 2 presidential cycles before I completely lose
Yeah,
faith.
that sounds about right.
But
Dork's gonna make so much money when he stops believing in people.
I mean, like I've been voting since 2012, right? I voted for, I think that was McCain in 2012, or no, it was Romney. I voted for Romney. I held my nose so hard, but
I met Romney in
he
2008.
seems like a nice guy, but he's probably a tool.
He's a total tool.
But
He was the
yeah,
last like moderate Republican candidate there. I mean, he's definitely a tool, but
Yeah.
that's why I voted for him.
I mean, he's like crazy in his private life, but he kept his craziness there, it seemed like.
yeah, like you're supposed to.
Well, so I want to say that as the old guard moves out, right, these figureheads that were so easy to control and didn't have individual thoughts, as they start to move out, I want to believe that we as a populace are going to look for a better solution, because we've seen for the past, I want to say 16 years, right, or 12 years, 20, like 10 to 12 years, we have seen the impact of extremism on our actual, not only
Okay.
our
So
landscape.
Dork is going to lose his faith in humanity next November when Trump is reelected.
If Trump is reelected from prison, dude, I'm gonna lose all faith.
You can be elected from prison, and if he goes to prison, he will absolutely be reelected.
You know what's funny? Okay, so you're probably gonna yell at me about this, but some of the other Republican candidates that I've seen come out, I mean, even Chris Christie, he's one of the GOP nominees, one of the potential nominees, and if you listen to him talk, he is very moderate. Like,
yeah, but you could go back to when Trump was elected, right? And see Chris Christie gargle his balls after he lost in the primary, right? He's not going to win a primary against the
Wasn't
guy
that the argument
that
for
he
Trump?
licked the
Is that
balls
like
out.
Trump was a Democrat for like 30 years, so he would totally be moderate.
it's the argument in 2016 for sure.
I don't think the arguments for Trump were all very fleshed out.
No, I mean, the main thing was that he was supposed to be quote unquote salt of the earth. He ran a big business, so he was smart about money and finances and all these things. And I mean, some of his economic policies were okay back before COVID, when he fully went off the deep end. Like he did some stuff that I thought, I was like, all right, that's agreeable, right? But after COVID, I just realized his leadership skills were completely not up to snuff, and he was not mature enough to be in the position he was at. And some of his things he was doing too, in terms of the geopolitical landscape, were wildly irresponsible.
But here's the thing: we all miss the tweet. We miss the crazy. You know how people are always drawn back to that one crazy ex that was just a nightmare. You just think about her.
I mean, I'm not gonna lie. If Trump goes to a federal prison this year, right? Don't you kind of want to vote for him to see what it's like to watch a mob boss run the country from prison?
Yes.
Jesus Christ.
I
dude,
mean, our
like,
society will fall apart, but the reality TV is going to be amazing.
dude,
I
like,
mean, the entertainment factor is through the roof. He will become the greatest entertainer of all time.
the fact that we're having this discussion, all right, I don't even need another 2 presidential cycles. It's dead. It's gone.
No, I will make this pledge now. If Trump is in prison, I will vote for him.
God damn it, fresh.
I
swear to God.
only want convicted felons running the country from now on.
At least it's more open, you know. At least they're not hiding it.
Dude, well, I don't know. For the past 3 cycles, I've just voted NPP or Green Party down the line. The Green Party thing I'm kind of not doing anymore, but
Oh my God. Could you imagine if like Fox or ABC or someone made like a series of just like trying to jailbreak the president out of jail to restore him to
His
the
rightful throne.
glory befit a United States president? And like it would just be a bunch of those tactical bros that are out in the woods doing whatever they do,
Just
with
like
guns
foreign
and stuff.
dignitaries visiting him in solitary confinement in Colorado Springs.
Right.
Oh my God, it would be awesome. It'd be like war in America. It'd be literal like war in America where it's like this fortress and they have to. It would be, oh my God. I mean, this story
It's what the preppers have always wanted.
You see, I'm
writes
just reading
itself.
press releases from prison where he's like, I have issued an executive order increasing the the maximum allowable deposit into the commissary account.
Yeah, I was
I have
gonna
made
say
a lot of money
prisoners
selling cigarettes.
prisoners' rights are gonna get a whole lot better, right?
I mean, that would be great, actually.
Or yeah, or just, I mean, well, if we could just reduce the prison population in general, that would be the best. But yeah, politics
I
aside,
mean, the best way to solve a problem is to inject white people into it, right?
of course, but it's such an awful. But I mean,
How quickly did we solve the opioid issue versus
we made
like
it
crack?
10 times worse. That's what we did.
Well, yeah, we made it bad, but then once everyone was just like, "Oh man, this is hurting a lot of white people," we started, about facing real quick. We need
So
to save all these white people.
I'm still
Anyway.
thinking that, I mean, I think that I hope that there's enough reasonable people to understand that, one, Biden's an
Oh my
old
God,
fuck.
you will never
Two,
learn, man.
two, Trump is an old fuck. I mean, well, okay, so we had Dianne Feinstein having her senility fit in the middle of a vote. We had Mitch McConnell going into a stroke in a press conference.
Okay, so between
Dude, Mitch has
Trump
been
getting
stroking
reelected,
it for 12 years, all right?
between Trump getting reelected from jail and both Dianne Feinstein and Mitch McConnell getting reelected next year, assuming they're up, will that finally kill your faith in humanity?
That might actually do it. If
God,
Dianne,
I need to buy a house in Dianne Feinstein's district and one in Kentucky.
well, she's actually said she's not rerunning, so that's not going to happen unless that's just not going to happen.
I mean, between now and then, if she loses her power of attorney, her kids will put her in there, I'm sure.
I don't know. I want to say I've been this has been my kind of my underlying thesis for the political sphere since 2016, 2017, that the polarization is going to increase, the pendulum's going to reach its extreme point, and then it's going to start slowly moving the other way. And I'm hoping that
Do you know how it moves the other way?
Worse. But
okay.
I'm just saying. Okay, so I'm just saying that the pendulum's going to reverse, and we're going to see a transition away from the old guard. And in that, we're going to see instability in the leadership, and a bit of a shakeup. And I know there's still just going to be Muppet figureheads that get voted in, but maybe these Muppet figureheads, because they're young and full of spunk at a ripe young age of 50, they may actually, do things that are good for the country or our population, because we no longer have the stalwarts to vote for. we may actually accidentally vote in the people that are good for us.
Well,
I love how
steering the
Dork's like broad
conversation.
shift in power is so peaceful and nonviolent.
Trying to steer this back to a non-political and more economic thing. We've talked a lot about age, and I think it's pretty clear we all agree that unfortunately, there's no way that the politicians will help fight inflation through taxation, changes in taxation rules. But we talk a lot about age, and I think I mentioned this before earlier in the year, but I've been thinking about it a lot. Is how much of this dynamic that's occurring is the desire for the younger generations to extract the wealth from the older generations that just won't let go. So, like, demand for wages is rising because we're finally getting a large swath of older folks to retire, and those folks need services, and they need stuff from a shrinking population of people who are willing to provide it to them, and they're demanding more of their money and their houses and all the other shit that they own that they just have hoarded for their whole lives.
Yeah, that's definitely a something that is happening. Whether people know what they want money from or not, implicitly a demand for higher wages has to come from a liquidity pool somewhere. And right now, the largest owner of assets in the nation is boomers. So, yeah, it's definitely, I think, an inevitability that's going to happen, especially if wealth is just naturally transferred. But you're right. I don't know if it's necessarily bullish or bearish, though, right? I think that's just more of something that's going to happen. I think the scarcity of employees is going to continue. However, as boomers continue to die off and their effect on demand for services reduces, we may see some sort of equalization in the workforce in America, especially because by that time we're going to be seeing more onshoring of manufacturing, hopefully.
See, I think as boomers die and retire, you'll see wealth continue to accumulate in the upper end, but you'll see power shift, right? So like their children will just inherit their shit, but their
Yeah,
children will have less agency to hold on to that wealth than the boomers did. And I think that's the breaking point there. That's where you need a broad shift in power dynamics. And this
yeah.
doesn't sound like a positive event.
No, I mean, well, you've
No,
seen
but
the
if it's a slow enough event, that could be a way into a soft landing way over time. Would
Yeah,
be a
I
really
can agree with that.
protracted.
we've seen outflows from 401ks, recently that are higher than normal, right? People cashing out their 401ks and just taking the hit.
But a lot
There's
of
a
those
growing
people cashing out those 401ks are like our age.
Yeah, that's what I'm saying. So there's a growing sentiment amongst people our age that we're just fucked. And the hedonistic view of money is starting to take hold where, we just, people are starting to be resigned to the idea that we're just going to be wages and trying to save up for retirement is fucking stupid. And we should just take the money we have, enjoy what time we have, because the next generation is just going to be absolutely fucked. It's there.
Nobody wants to eat shit. Someone's got to eat shit.
I mean, our
Nobody,
generation
we're eating
stands
shit.
to inherit the wealth of the prior generation, right? Which
There's going
means
to be
that we will then draw the ire of the then older Zoomer generation and the generation that comes after that, right?
well, but like you're assuming that everybody's boomer parents are rich, right?
I
That's not the
mean,
case.
but enough of them are. I mean, my parents don't have shit, right? But like, um, I mean, there is going to be that transfer of wealth over the next 15 years, and it's going to happen. But we're not, our generation isn't entrenched or powerful enough to, hold back the rising tide of the pores. And so, you know, that creates a power vacuum.
Yeah, every recovery and every transfer of wealth is K-shaped, right? You have one segment that benefits and one segment that doesn't, and you increase the wealth disparity each time. So you're absolutely right that the multiplicative effect this has on the growth of the lower class is it's dangerous, right? And this is what, you know, I think that
I think
long
it's
term.
already dangerous. I think it's
Oh, yeah,
going to
of course.
become, you know,
It becomes a flashpoint at some point,
yeah.
right? Of course. But and we saw that in like 2020 with everything that was happening, it became a flashpoint really quickly. But we thankfully were able to, well, not we, but thankfully the powers that be were able to redirect the anger towards specific things that had nothing to do with the underlying issue, right? And like why things were happening the way they were. The reason things are happening the way they are is because we as individuals, as tiny little, you know, cockroaches, have absolutely no say or power in anything that happens on any level besides like our, you know, our HOA. We have no control. So like that's really the frustration we all feel, is the complete lack of control. And as that control gets wrested away from us, it only, you know, the sentiment only grows. And that you're right. That is the real danger, is that the wealth destruction that happens is because of a societal shift. I mean, we're already kind of seeing this with the mass lootings of stores, things like that.
Yeah.
So like that's the part where I think that's got to make the people with the real money pretty nervous.
Well, I mean,
And
either our society becomes more balanced or way more restrictive, right? Those are the
yeah,
two like endpoint solutions. Is, you know, we find moderation and we're able to close wealth gaps over, you know, a generation, or you know, we need to move further into a stronger government, and you know, more of a police state.
the Leviathan.
Yep.
Yeah, it's
Well,
it's
I
gonna
just
be
hope we
interesting.
don't move to a, you know, the
I'm gonna just
whatever they
move to
call
Europe.
like the what's the Chinese score, that like the individual score they have, like if your social score, if you do those stupid
Social credit.
things,
Yeah,
or
yeah, you
I'm not gonna thrive in that environment. I'll tell you that right now.
Me either. Yeah, it's not designed for me.
yeah. Even Europe though is not exactly the place to be. I mean, because people in Europe are a little more willing to get angry than the people in the U.S.
You think Canada will just forget?
I think
Like
I
everyone
think
will
that
just forget Canada. I'll move to Canada. No one's gonna remember they exist if they're busy with other stuff.
you see, I'm thinking the best place to move would be somewhere like, what's the name of that country?
Somewhere where the wealth disparity is already blown up. What's on the chopping block? Brazil?
I was thinking like, yeah, Argentina maybe.
Oh, okay. So you
But I mean, if
move
you
you
don't have,
move it you transition into the recovery, skip the revolution.
Yes.
Smart.
Ooh,
I
I
like
like that.
this. I like this a lot.
yeah,
So
it's
we just need to wait to see who revolts first. And well, I mean, what's all the stuff in France? Is that all resolved? Was that just a hissy fit? What was that
Well,
about?
they're moving towards the police state.
yeah.
So France could be one to look for.
Yeah.
Keep an
I'm
eye
just
on
gonna
that
move
one.
wherever I feel that my money will be best protected. I'll start
Uh,
longing the currency soon.
I'm telling you, India, man.
Uh,
Hot
Hey,
there.
who needs to do it,
India's got
right?
a long way to go.
Hey, if you're, it depends on if you're trying to be more risk averse, but you're right. Your dollar will go a far ways in India, no matter how much it inflates.
That's true.
All right, guys. How much more gas we got in the tank here?
Ah, I'm
Is there
about
anyone even
done.
left? There's
Yeah.
still 229 people here. What
Yeah,
the
our
hell is wrong with
conversation
you?
was way too compelling, apparently.
232. It's done up.
We
It's
started
going up.
talking about Trump and it fell off like 100 people, but yeah. there's still like 230 watching, so we weren't able to get
Oh
rid
my
of them
God.
all this week. I guess we could talk about like your approach to keeping your pool so crystal clear, and like what alkalinity and pH balance are you targeting relative to free chlorine?
I mean, it's like I try to keep a pH of like six-ish or so.
Okay, so a little low on the pH side.
You want to stay a little low because the alkalinity will allow biomass to thrive.
Aren't you getting like a big buildup of muriatic acid there?
Well, so it naturally becomes alkaline over time as you accrue biomass. So I have to keep adding muriatic acid to keep it acidic.
Interesting.
Um, yeah, and then the free chlorine, you just want to keep it high enough, not too high. I
Are you
mean, just
targeting? I mean, you must with your pH so low. You must be at like what 10 part per million.
no, I keep it like 6, 7. 10's
Okay.
high. 10, you start to like feel it. Okay,
All
3
right.
people have come in since we
Yeah, I
started
know
talking
this
about
isn't working. People are like, "Wait, I want crystal
Crystal.
clear pool water." All
I
right.
do turd to modify the acidity levels of pool. It makes it alkaline,
Mm.
and it eats up a lot of free chlorine. So you just
Unless you
shut
feed
the
your
pool.
children Taco Bell,
Uh,
and that's how
Let's
you
get into
boost
these,
the
man.
That's how you boost the acidity
yeah,
levels.
we're all very acidic human beings in my house.
All
All right, we lost NW at least.
right. Well, that's one down. All right, guys. Thank you so much for coming on. We'll wrap it
All
up
right,
here, and so I think everyone's outlined their expectations for this week. We're probably good to go and do something else with our days. Thank you guys all for tuning in, guys. Thank you so much for coming on.
Thanks for having us.
yeah, always fun.
All right, I'll see you all tomorrow. Pickles Picks will be out tonight. Have a good night, everybody. Later.
See ya.